So today we are going to see the chapter 1. Chapter 1 is the nature, objective and scope of audit. Okay. So as and when I'm going to go through this chapter, you are going to understand why this chapter name is given as its nature, objective and scope of audit. In this chapter also we are going to read what is the nature of audit. What is the objective of auditor? Why is audit done in the first place? And what is the scope of audit? That means how much audit is to be done. Okay. So yes, so let's start with the chapter. So first when we enter into this chapter, they have given a topic known as the meaning and definition of audit. So what is auditing is what they tell here. Okay, so in the first here, they have given you the meaning of audit. They tell you that audit is an independent examination of financial statement. What do they want to convey here? They want to tell that, see, an auditor must always be independent. Independent means he must not be under any influence. The auditor must always be independent. Okay, he is independent now. The next thing what he has to do is he has to do an examination. He has to do an examination. What is examination? Examination means he has to check something or verify something. What has he to check or verify? He has to check or verify the financial information of the company. So a company will have a lot of financial information. The auditor's work is to check or verify or examine the financial information that is there in the company. That is nothing but your financial statement. So so here we'll draw auditor. So what this auditor does, so the auditor does nothing. He is independent and he just examines or verifies the financial statement or financial information of the company. So that is a basic work of auditor. Okay, so now we know that what an auditor has to do in a company. Okay, so this auditor, in what all kinds of companies will he go and check the financial statements or the financial information? What is the question here? This auditor, this kid here, I mean not the kid, this sir here, which company's financial statement will he go and audit? Here they have told you in the second point that this kid, I mean this sir, who is the auditor, he has to examine the financial statement of any entity. Any entity here means every entity. It may be either profit oriented or not profit oriented. It may be a bigger size company or a smaller size company. Okay, or whatever its legal form may be. Okay, it may be an NGO also. So whatever kind of company it is, the auditor has to go and examine their financial information. So this is what they tell here. Also, see, the auditor, now we have told that the auditor has to go to each and every company. That means any entity, and not company, any entity, and examine their financial statement. Why is he examining his financial statements here? There must be some purpose. No, he's not mad to go and just verify all the financial statements of the company, right? So what is the purpose of auditor? Why is he going and verifying the financial statements? Can someone answer me? Why is he going and verifying the financial statements of a company? What is the purpose? To express an opinion, correct. So what this auditor does is that he goes and verifies the financial statements and he tells us an opinion. He tells us his opinion. So now if you go to Reliance Trends and if you see a shirt, okay, now there are three people, suppose here is Raju, Ramu and Rekha. Okay, I have three people with me. Okay, I go and ask them, how is this shirt? They will tell their opinion, right? One person may tell this shirt is good. One may tell that this is very old fashioned. Another one may say, I don't have any opinion at all, or I don't want to give any opinion. So there may be different kinds of opinions. This auditor also does nothing, but the same thing only. This auditor will not tell an opinion on shirt. Rather, he is going to tell his opinion on the financial statements of a company. Okay, so what are the kinds of opinions and all we will read in the later chapters of audit. So he's going to tell his opinion about the financial statements. That is what you have to understand here. Okay, why is this auditor going to give his opinion? What is the purpose of giving the opinion? See, here if somebody is going to give me an opinion about how the shirt is, I'm either going to buy it. Right, I will either buy it or not buy it. Okay, likewise, if the auditor is going to give me an opinion on the financial statement, what is its use? What is the use of giving opinion on financial statements? The use is that the people or the owners who are not, what happens is in a company, the owners are its shareholders. So this is a company, okay? So the owners of the company are shareholders. These shareholders, they don't come to the company every day and check whether the company is working properly or not. So when a person who is highly qualified gives a opinion on the financial statements, they understand how the company is working. Likewise, auditing of a financial statements has a number of use, okay? Likewise, if there is some investor, okay, he will see the financial statements and only invest in the company. If there is no auditor, what the company will do? They will show their financial statement to so much beautifully that every investor would want to invest in that company. But if auditor is that, they cannot manipulate their financial statements. This auditor will anyway going to check if it is correct or not. Okay, so it helps the outside people of the company to look into what the internal matters of the company is happening there. Okay, so this is basically what audit is. Okay, this is basically the work of auditor. Is it clear, guys? This is the base. Okay, is the base clear? Now we are going to dive into the chapter. Okay, yes. So here what they tell you. So here in the next point they tell you that the person conducting this task. Who is the person conducting this task here? This task means auditing. Who conducts the auditing? The auditor conducts the auditing. So the person who conducts this task should take care. He must take care of something. What must he take care? He must take care to ensure the financial statements would not mislead anybody. He must see. Now, like I told you, they may show the financial statements so beautifully that every investor might want to invest in that company, but that might not be the truth at all. So this auditor has to take care. He has to ensure that the financial statements which are shown by the company are not misleading anybody. They are not misrepresenting anything. Okay, they are all correct. Okay, so how will he check that? How will he check that? They have given here a few points. Okay, he has to do honestly by satisfying himself. That how will he check that is, first they have told whatever accounts are being drawn by the company with the reference to the books of, whatever accounts are given, in the financial statement, they will have P&L account, trading account, all those accounts, are they in reference to the entries? So whatever journal entries are given, according to that only other financial statements are made. You have to check that. Okay, are they both matching? You have to check. Next, you have to check the journal entries which you have made. Suppose you have made a journal entries for sales. Then have such sale actually happened? The evidence for it you have to check. First, you have to check whether the accounts are made using the proper entries only. Second, you have to check whether the entries are actually true. Do they have evidence? You have to check that. Second thing you have to check. Third thing what they tell you is that, so whatever entries you have made, whatever entries you have made, whatever entries you have made into or you have turned into financial statements, have all these entries been taken into account? You have to check. No entries must be missed out. Have all these entries be taken into account? You have to check. Okay, next they tell you that not in the books as found in place of financial statements. Here they tell you that whatever entries are not there in the account itself, in the journal book, these entries are not there itself. Few entries are not there itself, but they have been shown in the financial statement. This must not happen. So you have to check whether the entries which are there have. So you have to check whether all the entries which you have done are first taken into consideration for financial statements, and the entries which are not there should not be falsely taken into consideration. Okay. So what are the first 4 points? Whatever entries you have made, according to that only accounts you have to prepare. Whatever entries you have to make, for that is evidence there. Third point, have all the entries been taken into consideration for preparing the financial statements? And the fourth thing that you have to take into consideration is that the entries which are not there should not have been falsely taken as an account. Okay. That is the third point. In fourth point, they tell you that the information which is conveyed by the statement. So when you read a financial statement, there is some kind of information that it will try to convey you. See, there's this many assets are there in the company. In such big companies we have invested. Okay, we only have very little liabilities. Like that, many information, the statement, once you start reading the financial statements, it will convey. Okay, you have to see whether it is all clear and unambiguous. That means no wrong information must be there. Every information that the financial statement is trying to convey to you must be correct. Okay. Fifth point, it is telling you that the amounts which are given in the financial statements, that this much assets are there, this much liabilities are there, this much sales have happened, this much purchases have taken place. All these amounts, whether they are properly classified, described and disclosed, you have to see. Okay, the company must not hide these amounts, okay, for a better presentation of financial statements or for showing more profits. You have to check whether all these amounts have been properly classified, described and also disclosed. Okay. Next, they tell you that the statement of account should present a true and fair picture. Okay, so whatever statement you are providing, where the company is providing, it must show a true and fair picture. So these 6 points is what the auditor has to take care. Okay, that these 6 points, if they are taken care of, it will make sure that the financial statements are not misleading anybody. Is this clear, guys? Is this clear? So next, what we are going to see is the objectives of audit. Objective of audit. Okay, why is audit done? Okay, the objective of audit. Okay, why you can say as why is audit done? Okay, so what you have to do while you do audit is that SA 200 tells you. SA 200 tells you the overall objectives of independent auditor. Also, this overall objectives of independent auditor is a question of RTP May 20 and RTP May 19. Okay. Yes. So here they tell you that there are 2 objectives of an auditor. There are 2 objectives of an auditor. What are the 2 objectives of an auditor? Is that first, the auditor must obtain a reasonable assurance. The auditor must obtain a reasonable assurance that whatever financial statements are there, you know, the financial statement which he is auditing, it must be free from material misstatement. It must be free from material misstatement. That is the first thing he has to do. Okay, he has to check. Okay, he has to obtain reasonable assurance whether the financial statements which he is auditing is free from material misstatement. What is reasonable assurance here? Reasonable assurance, always remember, he cannot say that 100% this financial statements is free from material misstatement. Any time he cannot say 100%. 100% if he says, that will become absolute assurance. Okay, he can only be sure of 70 to 80%. That is what is reasonable assurance, that this financial statement, until how much I have audited and being true to myself, these are free from material misstatement. Only 70 to 80% he can assure. Okay. Next, they tell you that he has to also report on the financial statement. I already told you, know, that he has to give a opinion. In what he will give his opinion? In his audit report, he is going to give his opinion, right? So that only they are saying nothing but to give his opinion. How will you give the opinion? As a report. So you have to report on the financial statement, and also you have to communicate whether all the standard on auditing which has to be followed by the auditor have been followed. Okay, that you have to see. Okay, so what are this is very important, guys. So what are the 2 objectives of auditor? One, that he has to give a reasonable assurance on the financial statement that these financial statements are free from material misstatement. Second thing, he has to give a report on financial statement and also communicate whatever has to be communicated by the standards on auditing. Whatever the standards on auditing tell the auditor that you have to communicate, this auditor must have communicated it. These are the 2 objectives of audit. Okay, guys. Next, what we are going to study, see, now we have studied what is the nature of audit. Okay, and we have also studied what is the objective of audit. There are 2 objectives of audit we just studied. Next, we are going to study the scope of audit. Okay, next what we are going to study is the scope of audit. Once again. Yes. So scope of audit. What does scope of audit mean? Scope of audit means nothing but the coverage. To what extent? See, this is the auditor. Okay, so the scope of audit tells him, it tells his auditor to what extent or to what how much coverage should he have when he audits. Okay, so now if I'm a new auditor, I will not know how much audit I have to do. So the scope of audit tells you how much audit do you have to do, how much coverage do you want, you should have, or how much till how much extent you have to audit. So this only this topic tells you. Okay, this tells you the extent or coverage or scope of audit. Okay, guys. So here we have around 7 points. Okay. Yes. So let's start. So first it tells you that whenever you audit, you know, The audit should cover adequately all aspects which are relevant to the financial statements. So related to financial statements or relevant to financial statements, whatever aspects are there, you have to adequately cover them. What are these aspects it is trying to tell? It is trying to tell us what are the aspects or areas that we have to cover related to financial statements. We are going to read in the later chapter, later part of the chapter. Now you understand that related to financial statement, whatever aspects are there that we have to cover during our audit. Okay. Next, what we have to do is we have to check whether the second point, okay, we have to check whether the information that is there in the underlying accounting records or source data, that means from wherever you have made, okay, there will be a few documents using which you have made your financial statements, right? So there will be a few documents using which you would have made your financial statement. So whatever documents or data or records you have used to make your financial statements, whether all this information is reliable and sufficient, you have to check. Okay, whether it is reliable or sufficient, you have to check. So this is the second thing you have to check. Third thing what you have to check here is that the auditor should decide whether the relevant information is properly disclosed in the financial statement. So whatever disclosures you had to made, has it been correctly disclosed or not, you have to check. So what are the first 3 points? Whatever is related to the financial statements, all those areas or aspects, whether you have correctly covered, adequately covered, you have to see. Second point, you have to see whether the information, okay, which is in the accounting records or the source data, is it reliable and sufficient, you have to check. Third thing what you have to check is whatever information has to be disclosed, has it been properly disclosed, you have to check. Okay. Next, fourth point, here we read a second point, right? Here we read that you have to check whether the information is reliable and sufficient. How will you check whether information is reliable and sufficient is what they have told you in the fourth point. So the auditor will assess the reliability and sufficiency of information using, first they will study and evaluate if the accounting system and internal controls, okay, they will study the accounting system and internal controls. Okay, so what are the accounting systems that is there in the company, what are the internal controls that is there in the company. So what is internal controls? This also is a separate chapter for you in audit. Okay, so when you, after this, whenever we take more chapters, you will understand what internal controls actually is. Now if you don't understand the term also, it's still okay. Okay, so the auditor will study and evaluate whether the accounting systems which are there in the company and whether the internal controls which are there in the company, are they correct or not, are they good or not. Okay, so if the, see here I have written something. Okay, so if the accounting system and internal control is not good, then the information what we have obtained will not be reliable, because using this accounting systems only you would have found out the information, right? So then the information will also be not reliable. So you must, to check the reliability and sufficiency of information, you must study and evaluate the accounting system and internal controls. Okay. Next, you have to run a few tests and inquiries also. Okay, you may inquire a few people, or you may test a few people and find whether the information that you have got is reliable and sufficient or not. Okay. Fifth point, they tell you that the auditor determines whether the information is properly disclosed. So in the fourth point, I told you, third point. In the third point, I told you that the auditor has to see whether the relevant information is properly disclosed. So how will you see? How will you determine whether the information is properly disclosed or not? First, you have to compare the financial statements with the underlying accounting records and other source data. So what are financial statements you have prepared and using which documents you have prepared, these both you have to compare and see. You see here I've given you example. What will you compare and see is that you will see if suppose in the financial statements you have told that you have given rent for 12 months. Okay, you have to check the source data, that whether you have the 12 months bill or not with you, that the rent paid bill whether you have or not with you, whether this information which you have given that you have paid 12 months rent, it is correct or not, you have to check. So you have to compare the financial statements with the accounting records and source data. That is one way how you can check whether the information is properly disclosed. Second, what will you do is, see, there will be a few judgments that are made by the management. Okay, so management might make a judgment on how much the useful life of asset is. Okay, because we don't know how much actually the useful life of asset is unless that asset gets scrapped. Okay, that until then you will only make a judgment that this many years this asset may go on, like that. Okay, so if you buy a mobile, you won't know what is the useful life of a mobile phone is. You'll only make a judgment on it that this mobile phone may work up to this much years. Same way only. Okay, and also the bad debts. How much, if now I'm suppose giving money to my friend, I don't know whether I'll receive it or not. On my judgment, I will tell whether it is receivable or not receivable. Likewise, in the company, if there are debtors, the management will decide whether the debtors will become into bad debts or whether they will be still receivable. So all these judgments will also include a part of the information. So this and all will help you in finding out. Okay. So sixth point. Sixth point, they tell you that. So now what topic are we reading? Can someone tell me what is the topic that are we reading? What is the topic that we are covering? Someone? Scope of audit, correct? Scope of audit means how much we have to audit, what and all we have to audit is what we are studying now. In the sixth point, what they tell you is that the auditor is not expected to perform duties outside the scope of his competence. That means if I am an auditor now, okay, my auditor, I am a chartered accountant. I have been I have been taught to examine the financial statements. Okay, I have not been taught to how to do property evaluation. If suppose where I in a company, this is a company where I go to, this is the company. Here I am Bhavna, okay? Okay, this is me. I go to do audit of this company, and this company, what they tell me, you please do a property valuation. If they tell us, see, I am a chartered accountant. I am not made for, I am not, what do you say? I'm not trained to do property valuation. So this is outside the scope of my competence. This is not my scope. So if these such things are there, then these and all will not come under your duties. This and all you no need to perform. So that is what they're telling you. The auditor is not expected to perform duties which falls outside his scope. Okay. Seventh point, they tell you that constraints on the scope of audit. Suppose what happens is there are a few limitations. Okay. There are a few limitations because of which I will not be able to do audit how much I actually had to do. There will be a few limitations such that how much, see, this much audit I had to do, but I'll not be able to do this much audit. I'll only be able to do this much audit. That means my scope, there is some kind of a constraints on my scope of audit. In such case, what will happen is I will have to give a report, and in that report I will have to express an qualified opinion only. Okay, that is what they are trying to say here. Okay, so this is nothing but your this is your scope of audit. I hope the scope of audit is clear to you all. Okay. So now we are going to buck up a little. Okay. Yes. So next they tell you aspects to be covered in audit. Where did we read the word aspects? Where did we read this word aspects here? Aspects to be covered in audit. Can you tell me fast? I need everybody to answer. Where did we read the word aspects to be covered in audit? First point, very good, Nandita. In the first point we read, right, that there are a few areas or aspects that the auditor has to cover. Now we are going to read what are the aspects or areas that has to be covered by the auditor. Okay. So first what the auditor has to do is he has to do the examination of accounting system and internal control. Already in the last scope of audit itself we read this point. He has to examine the accounting system and the internal record and assess whether this accounting system and internal record is appropriate. That means whether whatever accounting system you have adopted or whatever internal controls that have been adopted by the company, are they appropriate? You have to check. That means are they suitable for the business or not? You have to check. Okay. And also you have to check whether this accounting system and internal control system is helping you to properly record all the transactions or not. You have to check. So two things you have to check: whether the accounting system and internal control is appropriate and whether it is helping you in recording all the transactions. So these two things you have to check. Next, what you have to do is whatever accounting system and internal controls you have adopted, you have to review them. You have to review them. What will you review is that whether it is adequate. So in the last point, I told you that it should be suitable. Now I tell you whether it is adequate. Suitable means, see there what might happen is that I will give you an example. Okay, now I'll give you an example. See, there is this accounting system. Okay, so there is this accounting system. Okay, this accounting system, I have a company. This accounting system will be suitable for me. Okay, like how a dress suits you. This may be suitable for the company, but you have to see whether it is sufficient for the company or not. See, I have a huge company. Okay, this is a type of accounting system. This suits my company, but for this huge company, will it be sufficient or not? You have to see. That is what is checking whether it will be adequate or not. Okay. Okay, that is your second point. In the third point, they tell you that you have to check your arithmetical accuracy also. You have to check the arithmetical accuracy also. So what the auditor has to check is that if there is a 10,000 rupees bill, he has to check whether only 10,000 rupees have been recorded or not, or is it recorded as 11,000, or is it recorded at 9,000. So whatever the bill amount is, according to that correctly, arithmetically, that means the correct numbers have been recorded or not, you have to check. Okay. Next, they tell you verification of authenticity and validity of transaction. That means you have to verify whether a transaction that have been made, is it authentic? Is it authenticated? That means if you have made a transaction, suppose if you have made a purchase, whether the purchase or the transaction that you have made, is it within your authority or within your power, or is it a right that you can purchase? Suppose this is nothing but this is a cleaner boy. Okay, he is a person, he cleans our premises, our company premises. He went and purchased raw materials for the company. Okay, do you think will this be within his authority or power? What do you guys think? Will this cleaner boy be authenticated, or will he have the authority or the power to make this transaction or purchase? Yes or no? Will he have the authority? No, right? Somebody who cleans the premises, I don't think they will have the authority or the power or the right to make purchases in the organization. So that auditor has to verify whether whatever transaction have happened, whether they have been properly authenticated. Next, you have also the auditor also has to check the validity of transaction. Validity of transaction means what they are telling here is the entries that you have made in the books of accounts, does that have the supporting documents? That means if you have suppose you have made a journal entry that we have made some purchase today. So to support that purchase, for that purchase, do you have some evidence? Do you have the purchase bill? You have to check. Validity of transaction also, you have to check whether the transaction that they have made is valid or not. Okay. Next, the auditor has to see that whether a proper distinction is made between the capital and revenue nature items. Okay. So if a item is of revenue nature, it will come in P&L account. Okay, I'm just giving you an example. If it is of capital nature, it will come in your balance sheet. So the auditor has to check properly whether this distinction has been made. A good example to this would be installation of machinery. Is installation of machinery a capital nature item or a revenue nature item? Machinery is a capital nature item. Okay. Is installation of machinery, that expense, it is a capital nature item or a revenue nature item? Very good, Nandita. It is a capital nature item. Okay. This is an expense only, but you will record it as a capital nature item. So whether this distinction has been made correctly or not, you have to check. Next, you have to compare whatever the balance sheet, profit and loss account or other statements you have made with the underlying record. Okay, that means whether according to whatever books of accounts are there, according to that only the balance sheet, profit and loss have been made, you have to check. Next, you have to check whether the title, existence and valuation of assets is proper or not. Okay. Title means who is the owner of the asset. Existence means whether the asset is actually in existence or not, and whether the value of the asset is correctly put in the balance sheet or not. So all these things the auditor has to verify. Next, the next auditor has to also verify the liabilities which are stated in the balance sheet. Okay, the liabilities valuation, what is the value of liability, all that the auditor has to verify. Then he has to check whether the result which is shown by the profit or loss account, that whether it is profit or loss, whether whatever result is shown by the profit or loss account, is it true and fair? The auditor has to check whether if it is shown as profit, then it is profit only, or if it is shown as loss, is it loss only? Has to check whether it is true and fair. Lastly, has to also see whether all the statutory requirements, that means whatever has to be complied in accordance to law, whether all those have been complied or not by the company, the auditor has to check. And finally, he has to see whether the reporting is true and fair or not. Okay, whether all the things in the company are true and fair or not, he has to check. Okay, we'll just give a fast glance over this. So now what did we study? Once again. So now what did we study? We studied the aspects. In aspects, we have covered around 11 points. Okay. So what and all did we study? We started with the meaning of audit, and then we studied the what are the things that the auditor should take care that would not mislead anybody. Then we studied the objectives of audit. Then we studied the scope of audit, and now we completed the aspects that have to be covered in audit. Okay. Now this is a very small topic. What are the types of audit? So there may be two types of audit. One audit is which is required by law. That means law tells you that you need to do audit. Other one is not required by law. That means voluntary audit. We can classify the types of audit into two. One is compulsory audit and the other one is voluntary audit. Okay, compulsory audit is something which is required by law, and voluntary audit means you itself do. It is not required by law, but for your thing, but for your safety or security, you do the audit. So these are the two types of audit. Here, there's nothing much to read. Here they have given you a few examples. Here also and here also these examples are given, these and all you have to read. In the exam, this may be asked in the MCQs. They will ask you, see, there is a Hindu undivided family. Is it compulsory for the Hindu undivided family to audit or not? They may ask. Hindu undivided family comes under the voluntary category. So the answer is that it is not compulsory for them to do the audit. It is voluntary. So like this, they may ask you a few questions. So the example alone, you have to study here. Okay. So now we have read types of audit. Okay, guys. Yes. So next we are going to read the advantages of audit of financial statements. What are we going to read? Advantages of audit of financial statements. If you are going to audit the financial statements, in the start itself I told you, what is the work of an auditor? His work is to audit the financial statements. So what are the advantages of it? Why would somebody want to audit? So in the exam they would ask you questions like this. See, ABC Limited is doubtful whether to get audited or not. Explain the benefits. So you have to tell them what are the advantages if you audit the financial statements, that they have to tell you. Likewise, in the last topic I told you, types of audit. Voluntary audit. Why would somebody do voluntary audit? Nothing, because of all these advantages they get. For this alone, they will do the audit of financial statements. Okay. Next, they will ask two partners. This is another question. Two partners have an argument. Okay, whether to conduct audit or not. Keeping in mind the provisions of audit, justify. Here also you will tell them the advantages of auditing of financial statements so that they are able to take a decision. Okay. So like this questions they can ask you in the exam. So now let's move to the advantages of financial statement. So if he is the auditor, what is the advantages of this is the advantages to a company. What will be the advantage to a company if they audit their financial statements is what we are going to study. Okay, this question can be asked as a case study question. It is important, so listen carefully. Okay, so the first advantage is that it safeguards the financial interest of persons who are not associated with the management of entity. That means whoever people like the shareholders or the debtors or creditors who are not there or who are not seeing the daily working of the company, financial statements are the only source by which they can understand what is happening in the company, right? So if there is a person who is auditing the financial statement and telling them whether whatever the company has given the information, suppose, see, now I am a shareholder, okay? I am the owner of a company. Now I don't go to the company daily and check whether what is happening in the company, right? So what would I do? There will be appointed an auditor. This auditor, what he will do is this company will give him a financial record. And he will tell that this financial record, we are going to show it to the shareholders to tell them what is happening in the company. So in such case, what this auditor will do is that he will go and check these financial records, whether this is correct or not. Okay, if it is correct, it will tell the shareholders that yes, this is correct. You can very much trust what is happening in the company, which is given in the financial statements is correct. Like that, he can tell you. So the trust here can be developed. Okay, so it safeguards the financial interest of the people who are not associated with the management of the entity. Okay. Next, it acts as a moral check on the employees from committing defalcations or embezzlement. Suppose what might happen is that, suppose this will be a statement. In this, what happened? This is an employee. This is a very bad employee. He's a devil. This is devil symbol. Okay. So he's a very bad employee. He's a devil. What he does is he comes to the company and he wants to take away 1 lakh rupees with him. Okay, he want to go to some game zone and want to play games, so he want to take 1 lakh from the company. What this devil employee does is that he comes to the company, and what he does is in the financial statements here, in this financial statement, in this area, what he does is he takes away 1 lakh rupees and he says purchase of raw material. 1 lakh, he just puts the entries and puts the entry and goes away. Okay, so in such case, if there is no audit, what will happen? The company will also believe that only 1 lakh rupees, say Ambani, in company like big company like Reliance and all, 1 lakh rupees is such a small matter. Okay, so they'll say, okay, raw material only they would have purchased, correct only. No, now we can't check whether the raw material is purchased or not because it would have been converted into finished goods. So in such case, what will happen is that the company will just leave as it is. But like that, this employees will get an advantage. So what this auditor, our hero, okay, this is his wings. This hero, what he will do is he will come and he will check, he will come and check, he will check the financial statements. He will go to the employee and ask, show me the purchase bill. Where is the purchase bill? From which vendor did you buy? He will go and get external confirmation from the vendor also. So like this, he can do many things. So now the employees know that this is one angel who has come and who is checking everything. In such case, this will act as a moral check on the employees. The employees will be discouraged from doing such activities. That is what is told in the second point. It acts as a moral check on employees from committing defalcations or embezzlement. Okay, as the auditor will check for fraud. Okay. Third point, they tell you that audited statements of account are helpful in settling liability for taxes, negotiating loans, and for determining purchase consideration. Here what they tell you is that if your financial statements are audited, if your financial statements are audited, in such case what will happen is, see, there is the first they have told you it will help in settling the liability for taxes. That means the auditor is there, he would have audited the whole financial statements. Now he will know how much tax you have to pay, what and all tax you have to pay. So it will be helpful for the company to settle their taxes, correct? As the auditor himself will tell you how much you have to pay and all of that. Next, in negotiating loans, that means suppose what happens is he's a man, okay, he wants to, he goes to the bank and asks for a loan. What will happen is, see, if this person shows this financial statement to the bank, for getting loan, this person might also have can also make false financial statements, right? So if there is an auditor who is given a signature that this financial statements are correct, this bank will also trust the financial statements, right or wrong? Will the bank trust the financial statements or not? Will he trust when it is signed by the auditor, or will he trust it more when it is not signed by the auditor? Please tell me. When will the trust be more? When the auditor signs. Very good. I see Nandita replying like back to back. I need answers from other people too. I hope you guys are not sleeping. Yes. Okay, very good. It is when it is signed by the auditor, correct? So this is one kind of a advantage when you audit a financial statement. So it is an advantage for the company, right? Also, it helps you in negotiating loans. It can tell, you can also negotiate that, please, we have very good profits in the company, and the profits what we have stated is also correct. It has been actually audited. These profits are correct. So please give us a loan at a low interest rate. Like that, you can also negotiate. Okay. Next, it determines determine the purchase consideration. So purchase consideration is also determined using assets and liabilities. So if the assets and liabilities, whatever are stated in the financial statements are audited, it will help you in determining the purchase consideration. Am I going a little fast, or is the speed okay? No, right? Okay. In the D point, what they tell you is, these are also helpful for settling trade disputes for higher wages or bonus. Here, what might happen is, here I have given you an example. Suppose what may happen is that there will be employees in a company. Okay, what may happen is they will ask the company to increase their wages or bonus, or give more bonus. Okay, these employees, what happened, for the past 5 to 6 years, they are continuously asking the company to increase their wages or give bonus. But what this company, every time what this company says is that no, we don't have the scope to increase our cost. We don't have a scope to increase our cost means giving you more wages is a cost to the company. So right now we are not in a position to increase our cost. Okay, but this employee, what they say is that, see, every time you say this only, we are not going to believe you. We are not going to believe you anymore. In such case, what the company can say to the employees is that, see, you don't believe me, it's okay. What you can do is you can do a cost audit and verify the truth by yourself itself. The auditor will himself tell the truth to you. Okay, so this will help in settling the disputes. Disputes means nothing but the fights that are happening for higher wages or bonus. So that is one advantage if you audit your financial statements. Okay. Next, if there is some kind of an insurance claim that you want to take in respect of a damage that is suffered by a property or by fire or something, if an auditor audits the financial statements, he will tell that yes, truly this much goods are only what have been damaged. So the insurance company can also put in the trust and you can get more insurance claim. Okay, or else if the insurance company is not going to believe it, it will only give you less claim. Okay, that is one advantage. Next, the auditor can help. The audit can also help in the detection of wastages and losses. Okay, so whenever a qualified person, a very knowledgeable person is seeing your financial statements, he can tell you where you are going wrong. Okay, the wastage and losses that you are making, he will tell you. And the auditor can also recommend you on how to reduce these wastage and losses. So this will be one more advantage. Next advantage is there, auditor ascertains whether the necessary books of accounts have been properly kept. So whatever necessary books of accounts are there, whether it is properly, see, I am the owner of the company, I am the one of the board of directors, I am one of the board of director member. What will happen is I will not know what is happening at the lower level. So if the auditor checks, he will check and tell me whether the books which have to be actually prepared by the company are actually being prepared and properly kept or not. Okay. Next, he will also report whatever weakness is there in the company, which will help our company to fight the weakness. Next, they tell that if you do audit, you will be able to settlement of accounts at the time of admission or death of the partner. So what will happen is at the time of admission, that means a new partner will come into the company and he has to bring goodwill to the company. Likewise, when a partner death happens, his legal hire will take the portion of whatever is related to the death of the partner. That means the dead partner, whatever his belongings are there in the company, the legal hire will take it from the company, right? So when such things happen, see, the new partner who is going to enter into the firm or the legal hire is there, they both were not related to the firm previously. So they didn't know how the firm was working previously, what were the profits, what were the losses. So if there is an audited financial statement, they will be able to trust the financial statements, and according to that, they will be able to settle the accounts. Okay, so it will be of a great help to the people who are coming into the organization or the legal hire. That is one advantage. Last advantage is that it gives assistance or issues. So what happens is sometimes there are government. I hope it's better now. Okay. Yes. So the last thing is that the government, what sometimes happens is, the government will ask you for audited and certified statements. If there are a few types of licenses which if you want to take, you need to have your audit financial statements audited. So in such case also, it will help you to take a license. Okay. So are all these points clear? Why you need to actually audit your financial statements? Are the advantages clear to you guys? Are the advantages clear? Do you guys have any doubts until now? Any doubts? You can ask me, okay? If you have any doubts, you can ask me. We'll move on to the next point. So now next we are going to move into the inherent limitations of audit. Next, what we are going to see is the inherent limitation of audit. Okay, just give me a second. Inherent limitations of audit. Okay, so whenever you audit something, so whenever you audit the financial statement, whenever the auditor audits the financial statements, see, there is always two sides to a coin, right? So there is always two sides to a coin. That means if there is a advantage from it, we will also have limitations from it. Correct? So like how you, whenever you go to eat a pani puri from a roadside stall, if you have the advantages of having the tastiest pani puris you have ever had, you will also have the limitations of, you know, having a dirty water or a very bad place near the sewage itself. They may have their stall. So like this, many limitations will also you will have. So there is always two sides to a coin. Likewise, there are always two sides to audit. Now we are going to read the inherent limitations to a audit. That means what are the disadvantages of audit. Okay, so here there is a, they'll ask you a question like this. Why this example? Just to refresh you guys from audit, to just take you to some other okay, yes, okay. So they in the exam, they will ask you a few questions. So how they'll ask you a question about inherent limitation. Also, this is a very, very, very important topic. This is a topic which is frequently asked in the exam. Okay, so concentrate on this. Okay. So in the exam, they will ask you that, see, auditor is not expected to and also cannot reduce the audit risk to zero. So now what is audit risk? This also you will learn in the later chapter. Okay. And cannot therefore obtain absolute assurance. For now, you understand that we always tell that the auditor cannot obtain absolute assurance, right? Why do we say like that? Justify, they will tell you. So in such case, if they ask you a question like this, what you have to do, you must not blabber something in the exam and come. You have to write all these inherent limitations of audit and tell them this is why we are not able to give you absolute assurance or 100% assurance. Okay. So now we are going to see. Easy only. Okay. So first topic is nature of financial reporting. Nature of financial reporting. So what happens is that when you prepare your financial statements, there will be a few things which involves the judgment of management. Okay, now you guys can give me example. What are the things that involves judgment of management? Already in the starting part, I told you. Give me one example. So I'll tell you. Okay. So judgments by the management. So I told you, in the life of an asset, the useful life of an asset, whenever you decide, it involves only the judgment of the management. Like how you cannot see my phone will work for 2 years is a judgment. Like that, this asset's useful life will be this much. It's also a judgment which is made by the management. Also, how many data will turn into bad debt, that is also a judgment which is made by the manager. What the depreciation rate should be will also be a judgment which is made by the management. So what happens is there are a few judgments which are involved by the management. Okay, and they are also subjective. If they see a few set of people will give one kind of a judgment on these things, another set of management can give another set of judgment on these things. So it is also very subjective. It differs from person to person. So this is one kind of a limitation, that this is not concrete. It is a subjective decision. It is just a judgment that you can make. Your judgment can also be right. It can also be wrong. So this is one limitation. Second limitation. What is the second limitation? The second limitation is the nature of audit procedures. So what is audit procedures here? This is also spoken about in the later parts of your chapter. I mean, in the other chapters. Okay. So here now you can understand that audit procedures is nothing but the way how you conduct audit. The way how you conduct audit is nothing but your audit procedures. How you conduct your audit. Okay, that is your audit procedure. Okay, so what are the limitations when you conduct your audit procedures is that what might happen is the management or others who are there in the company, they will not provide you. They may not provide you the complete information which is requested by the auditor. See, now I am the auditor. Okay, what might happen is this is a company. In this company, there is management and there are other people or employees are there. All of these people are there. What might happen is there will be a few information which I require from the company. But this management or employees will not provide me whatever information is requested by me. Either they will not provide it intentionally or they will not provide it unintentionally. It may be also intentional or unintentional. Okay, so this is one limitation when I perform my audit. Next is that fraud may involve sophisticated and carefully organized scheme designed to conceal it. So here what they tell you is when somebody is going to do a fraud, when somebody is going to do a fraud in the company, it will be carefully organized and it will be sophisticated. Okay, it will be designed in such a way that you are not able to find it out. Okay, so it will be designed in such a way. Okay, so what happens here is that the auditor is neither trained nor expected to be an expert in authentication of documents. So what happens is that, see, wait, before that point, we'll read this. Audit procedure used to gather audit evidence may be ineffective for determining an intentional misstatement. So what happens is, see, if there is something like an error, what might happen is, if you check it with a few documents, you may find that this error has happened. But when somebody is doing a fraud, you know, they will do it very cleverly, very wisely. Okay, they will do in such a way that you are not able to find out itself. So when I say, now I am an innocent auditor. I am an innocent auditor. Okay, I am an innocent auditor. Now, when I go to the company to audit and when I'm performing my audit procedure, see, I will not perform audit procedures to identify fraud. Okay, exactly. I'll perform to just check whether my financial statements are true and fair or not. So if such a fraud is done, that it is done in such a way that it does not catch the eyes of auditor, then that will be a limitation to audit. That the fraud might always be there. This is why I'll not be able to give absolute assurance. Okay. That is what they're trying to tell here. Audit procedure which is used to gather audit evidence may be ineffective. Why will it be ineffective? Because it is a fraud. Okay, for detecting an intentional misstatement. Okay. Also, so if there is a document, okay, and if the auditor has to see, if there is a document, suppose this is a document and a few entries are written in this. Okay, see, my work is not to check whether the entries are genuine or not. Okay, my entries to check, my main work is to check whether whatever entries are there, is it actually like this. Only on the basis of that only is my financial statement is made as only my primary responsibility. Okay, so for each and every bill, now suppose there are 1 lakh bill in the, or 10 lakh, suppose there are 10 lakh bills of sales in my company, the auditor cannot sit down and check each and every one bill of the company, right? The authentication of the documents, that means the genuinity of the operations, genuinity of the documents, whether it is forcefully done, like sales might not have happened, but from the vendor forcefully we might have taken a sales receipt. This and all I cannot sit down and check, right? Okay, so this is one of the limitations of audit. This and all includes, this and all comes under fraud. Okay, third one, they tell you, this has been already asked as a question in one of the exam. I remember this. Okay, but I don't exactly remember which exam, but yes. So audit is not an official investigation into alleged wrongdoing. So here what they tell you is that, see, if the company is doing something wrong, that is nothing but wrongdoing. If the company is doing something wrong, I am not someone who will officially investigate it. Okay, I'm not someone who is going to officially investigate it. So what is an investigation? Official investigation means that you will have a few legal powers. That means you will have a power that you can go and search any part of, like how, you know, police officers have the power at a crime scene. Like that powers and all I will not have. If somebody is not giving me the documents I'm asking, I cannot just have them at gunpoint or just force them to give me the documents. I don't have the legal powers to do official investigation. Okay, so because of lack of such powers, what might happen is, if the company is also doing something wrong, I'll not be able to find it out. So audit is not official investigation. It is just an examination. Okay. Okay, so that is what they're trying to say here. So remember this point. Audit is not an official investigation into alleged wrongdoing. This line is very important. Okay, next, timeliness of financial reporting and balance between benefit and cost. So what happens? Timeliness of financial reporting. So what happens here is that, see, auditor has a time limit to do audit. Okay, he has a due date within which he has to do the audit and submit his report. Okay, so what might happen in such cases is that what he might try to do is here. Here, what might happen is that the auditor might want to get some information. The auditor might want some information very fast because he doesn't have all the time in the world. Then in such case, he will have to incur more cost to get such information faster. Now what happens is the auditor sees it, so much cost is going on. Now suppose I'm getting 5 lakh rupees of audit fees. In that 1 lakh rupees is going as a cost itself. Now what I'm trying to do is I will try to reduce the cost to 50,000. In such case, what might happen is if I'm trying to reduce my cost, then the information, till I receive the information, the auditing report must have already been made. After that only I'll get the information. The information which I get will not be fast. Then in such case, whatever information I've got will be no value to me and will also be of low benefit. So here, if the cost is more, the benefit will, see the relation between the cost and benefit, you will have to decide and strike a balance. Okay, that is what they are trying to say here. You must try to strike a balance between the reliability of the information and its cost. Okay, you must not also compromise on benefit, and you must also not try to compromise much on your cost. Okay, so you must try to bring a balance between both. Next, one second. Okay, so next is other matters. So this is a RTP May 20 question. So we always, what we think, when there is something like other matters, if there is something like that, we take that sentence for granted. But this times May 20 RTP, this is a question. Okay, so see, other matters that affect the limitation of audit. This is the question they have asked you, and you have to explain what are the other matters that affect the limitation of audit. Okay, so here what they tell you is the auditor's ability to detect the material misstatement is difficult. Okay, why is the auditor's ability to detect a material misstatement difficult is what we are going to see. What might happen is that a fraud might happen, and the fraud might include or involve senior management. See, now if senior management is itself involved in the fraud, then they will try 101% to conceal that fact. It will become very difficult for us to find out that fraud. Next, they always tell you that you have to report about your related party relationships. This way, I think you'll read in your accounts. Okay, sometimes what might happen is the company itself might not know who their related party relationships are. So in such case, we never know what material misstatement might happen. If the company itself doesn't know, how will we know? Okay, yes, so that is a limitation. Another limitation is non-compliance of laws and regulations. We cannot go to the company and check if each and every little act is complied by them. Okay, so then in such case, non-compliance of laws and regulation is a limitation to the company. Next, future events or condition may cause an entity to cease to continue as going concern. In such case, see, the auditor can't detect the future, right? He is only working to see the present. So in future, some event is going to happen because of which the company is going to get closed. How will the auditor know? So that is also a limitation. So these are all the limitations to audit, guys. Are the inherent limitations? So we have read 4 limitations. Okay, are all these limitations clear? Are all the limitations clear? Also, this is one topic, how auditing and other subjects are related to each other, how auditing and accounting is related, how auditing and law is related. In the last, if I have time, I will teach you this topic. Okay, or else you can give it a read by yourself. This box in the last, if I have time, I'll teach you. This topic also in the last I'll teach you if I have time. Important topics I'll take first. See, qualities of auditor also, it is very easy only. Okay, these 3 topics alone, in the end I'll teach you if you have time, or else if you read it, you will understand. Now we have come to another important topic. Okay, so the next important topic is elements of a system of quality control. Elements of a system of quality control. Okay, so can someone tell me what does this topic mean? Anybody? We'll take a 1 minute break here. You have read too much information. So just as a break, what do you think this topic is trying to tell you? Elements of a system of quality control. So now we are going to see the elements of a system of quality control. So what happens here is that, see, what does the auditor do? What does the auditor do? Our auditor is kept there to examine the financial statements, right? He is there to examine the financial statements and tell his opinion on it. See, whenever you go to a restaurant, if you are going to eat something, you need quality in that, some cheap quality you cannot eat, right? if suppose you're going to a restaurant to eat chili parota, okay, now if they're making that chili parota using 10 days old parota, will anybody eat? Will you guys eat that? All the rotten, all the bacteria have come upon it. That will that chili parota, will you go to the restaurant and eat? Will you go and eat? Yes or no? You will? No? No? Nobody would go and eat that, right? Same, likewise, whenever you perform audit, there must be some kind of a quality in that audit. Okay. So, as I wish I go, I do some kind of audit and I come, like that and all, it should not be. You must have a quality when you do audit. This is nothing but the elements of a system. So this is what is quality control. So see, read the sentence, it will get clear. So if you need quality in audit, so quality in an audit is important, that you have understood. So if you need quality in an audit, you have to have a control over it. See, if you want the chili parota to be freshly prepared every time you go to the restaurant owner should have some control. Like he must only tell his employees that, see, this is, see, every time you make a chili parota, make it out of a fresh parota. Don't make it using an old parota. He has to have some control. See, if you make it using the old parota, then I will fire you out of the business. Okay, like this, if we make some controls only, the quality will be maintained. In the exam, if they put controls that you will be dismissed from writing CA inter exam if you copy or if you take a bit in the exam only, you will not take it. Or else everybody is ready to copy in the exam, right? Who is not ready to copy in the exam, correct? So likewise, if you need quality in audit, you need to have control over it. This is nothing but quality control. So for having quality, you are having some controls. This is quality control. Okay, so to implement such controls, okay, so that means if you want to implement the quality controls, you need to have a few elements. You need to take few elements into consideration. Okay, so first is that whenever you audit, you need quality. To maintain that quality, you will need some controls which are known as quality controls. Now, to implement such quality controls, you will need to take care or take into consideration a few elements. What are such elements is what we are going to see here. That is the meaning of the topic. Elements of quality control or elements of a system of quality control. Okay. Yes. So I hope the topic is clear to you guys. Okay. The meaning of the topic is clear to you guys. Okay. So here they have given you, see, these are the following elements. They have given you 6 elements: leadership responsibilities, ethical requirements, acceptance and continuance of client relationship, human resources, engagement, performance, monitoring. All these things are important if you want to maintain quality. See, you must have in a short form, I'll tell you all these topics are also explained in detail after this. Okay. Okay. That means you must have a very good leader who is ready to take responsibility of the quality. That is a leadership responsibility. Next is ethical requirements. So if you want to maintain a quality, you must have a few ethical requirements. You must what do you say? You must have integrity. You must be honest when you do work. You must have the confidentiality. All these ethical requirements you should have. Then only the quality of audit will be very good. Suppose I have a very secret data of the company and I start leaking it outside, then my quality is questionable there, right? Then my quality of audit is questionable there. So ethical requirements. Next is acceptance and continuance of client relationship. That means whenever you accept and you are going to continue a client, that means last year also you did the client, this year also you're going to accept and continue with the same client. In such case, what are the things that you have to remember regarding to quality? To maintain the quality, what are the things that you'll have to take into consideration? Next, what kind of human resources are needed to maintain quality? Engagement, performance, and how will you monitor all these? Whether all these are working correctly, how are you going to monitor it to maintain quality is what we are going to study here. So this was the basis. All these 6 points now in detail. Okay, yes guys, so I hope I'm audible. So also it's recording. Okay, good. So now let's start with the elements of a system of quality control. So what is the first element? The first element is leadership responsibilities. The first element is leadership responsibility. See, in everybody's life, there will be some person we look up to. Some person we have as a role model. Okay. So how the role model is according to that. Okay, if we see someone as a role model, we'll try to become like them. Okay, so if the role model is perfect, or a good person, or a nice person, or a person with good qualities, somebody who does what they preach, okay, then only we will also become like that. Okay, suppose my role model is a thief, I'll become like that, him only. Suppose my role model is Ratan Tata, I'll try to become more like him. Okay, so a leader is very important. Okay, let it be any area of your life. Let it be studies, let it be sports, let it be gaming. There'll be some person you look up to. Okay, so a leader is very important. We understand that. Likewise, in an audit also, a leader person who is going to lead the whole audit team is very important. Whenever you go to audit, you will have a team with you. There will be one person who is known as the engagement. See, I'll show you here. Okay, so there will be one person who is known as the engagement partner. This engagement partner will be the leader of the engagement team. Who will he be? He will be the leader of the engagement team, the audit team. This team is nothing but the audit team. So this engagement partner will be the leader of the engagement team. Okay, so how should this engagement partner should be? How should this leader be is what we are going to study in this leadership responsibility. Okay, yes. Okay, so what they try to tell you here is that, see, engagement partner, they have told you about engagement partner. So engagement partner shall take the responsibility for overall quality on each audit. That means this engagement, this nice cute person is responsible for the quality of an audit. So always the leader will be the person who is the most responsible for the overall quality. Okay, so whenever you do an audit, the leader is responsibility for the quality of it. Okay, yes. Now we are going to see. So what he tried to tell here is, so now we have seen that this leader is responsible. So now we have seen that this leader is responsible to maintain quality. Next point, what they try to tell here is that they tell that this leader's action should emphasize that quality is important. So see how the leader behaves, or the way he works, or the way he is while doing the audit must always speak for itself. It must always speak. He must not tell that for me quality is important, for me quality is important, for me quality is important. Always actions should, they tell you, action speaks louder than words. The same way, a leader's action must speak that quality is very important to him. Okay, and that quality is essential to him. It is very must. Okay, his action should emphasize two things. First thing is that quality is important for him, and the quality is essential for him. These two things the leader's action should emphasize. Okay, so here we tell you that quality is important. How will the leader or the engagement partner, emphasize that quality is important to him? How will he tell? Okay, so how will he try to emphasize is what they have given you in this 4 points. So first, whenever he is performing the work, he will comply with all the professional standards and regulatory and legal requirements. That is one way of showing that he is for him, the quality is very much important. Whenever he performs work, he'll comply with all the professional standards and regulatory requirements. Second thing, see, there will be a few quality control policies for the firm. So if this is my audit firm, that means I am an auditor in this firm. Okay, this is not the company, this is the audit firm. This is not the company we are going to audit. This is the audit firm from which the auditor is going to be sent to the company. So in this audit firms, see, there will be a written set of rules or policies or procedures that, to have standardization, this audit firm will have a written set of rules or policies or procedures. They will tell that whichever auditors goes from our firm to audit a company, they all must follow these. Okay, they all must follow these. Why will they have such written rules is that because so that every person who goes out from our company, whichever firm he audits, he is able to audit in the same way as all the other auditors of the firm are able to. Okay. So in such rules or policies, there will be quality related policies also. There will be quality related policies also. Okay. So this auditor must comply with this quality related policies also. So firms once again, firms quality related policy also he has to be complying with. This will show that for the auditor, the quality is very important. Next, issuing auditors reports that are appropriate in the circumstances. That means whatever you give, whatever audit report you are giving, if you need to give a qualified opinion, you give a qualified opinion. If you want to give an unqualified opinion, you give an unqualified opinion. Whatever is appropriate to the circumstances. Okay, such kind of audit report if you are giving, in such case you show that quality is very important to you. Fourth point is that engagement team. What is the engagement team? Can somebody tell me what is the other name of engagement team? I told you. Okay, engagement team ability to raise concern without fear of reprisals. See here what they try to tell you is, see, if there is an audit team or the engagement team, I told you, now we were talking about the leadership. Here they also tell you a point about a team. Here they tell you that engagements team ability to raise concerns. So whatever concerns they have, they must be able to raise it without the fear of reprisals. Reprisals means retaliation. They must not think what will happen if I raise this concern. If this concern needs to be raised for the better quality of the audit, that engagement team must have the ability to raise it. Okay, so these are the 4 points which will tell the importance of audit. Okay, so here where did we start? We started with that there is a leader, he is an engagement partner, he has a responsibility to maintain quality, his actions should emphasize that quality is important and essential. How will he tell that quality is important or essential to him? By these 4 points. Using these 4 points he will tell. Okay, so this was the first point. So here the first point of leadership responsibilities we have completed. Next point is ethical requirements. Next point is ethical requirements. So this was a question from RTP May 19, guys. So this was a question from RTP May 19. Okay, so here you can see 5 ethical requirements they tell you. Here the short form of this is copy. Okay, COPPI, copy. C stands for confidentiality, O stands for objectivity, P stands for professional competence and due care, another P stands for professional behavior, I stands for integrity. Okay, so these are the 5 ethical requirements that the auditor is relevant to auditor and auditor should also follow. Okay, yes. First, the auditor must have integrity. That means he must be honest. Okay, so whatever happens in whatever situation may be there, he must always be honest. Okay, next is objectivity. So what is objectivity? Objectivity means auditor should not be biased. He must not be partial to anybody. Okay, see, if some employee has done fraud, okay, but for him, if suppose there is a person who is auditing, okay, if suppose this is a he who is auditing, okay, there is a employee who is she, okay, who has done some kind of a fraud in the organization, but he finds her cute. So what he does is that he says that let it be. If I report this fraud, then she will get scolded. I don't want to do that. So what he does is he does some kind of a partiality or a biasness. This must never happen in audit. You must always be, you must always follow the rule of no biasness. Always be impartial to anyone. That is objectivity. Okay, next is professional competence and due care. That means whatever knowledge, professional competence means whatever knowledge is required for you to do the work, you must have the knowledge with you. That is professional competence and due care. Next is confidentiality. That means whatever the confidential information is there related to the company, you must not leak it outside. You must have the ethical requirement. It is your ethical requirement that you maintain the confidentiality or secrecy of the firm. Next is professional behavior. That means you must not do any such act which brings or defames our mother body or ICAI. Okay, you must always have a very good professional behavior. Whenever somebody looks at you, they must tell you that yes, you look like a CA. Okay. So that professional behavior must be there with you. So what are the 5 ethical requirements? Integrity, objectivity, professional competence and due care, confidentiality, professional behavior. So these are the 5 ethical requirements which are relevant to an auditor. Okay. So in this topic, we have a few more points. Okay. We'll also see that. Okay. Now, this apart from this, these are the 5 points. Apart from this, there is a 6th point. It talks about independence of an auditor. It talks about the independence of the auditor. Okay. So now we are going to talk in detail about, now when we studied the definition, you know that auditing is an independent examination of financial statements. So their first word we read when we started auditing was independent only. So what does this independence mean is what we are going to study in detail now. Okay. So the independence is divided into 2 broad classifications. One is independence of mind, then other one is independence of appearance. What is independence of mind? Independence of mind, here they tell you that, see here you can see. So what is independence of mind? Independence of mind is a state of mind. Independence of mind is a state of mind which permits expression of opinion without being affected by influence. So whenever you are going to give an opinion, in your mind there must be no influence at all. It must be totally your opinion, whatever you are going to give. Nobody must influence you or manipulate you to give some other opinion. So that is independence of mind. Next is independence in appearance. That means, once again. Okay. So independence in appearance. So what does independence in appearance means is that, so whenever a third party looks at you, you know, any person, maybe if a third party looks at you, they must be looking itself. They must tell that you are having integrity, you are having objectivity, you are having professional skepticism and all of that. A third party, whenever they just look at you, they must be able to understand that yes, you are a honest, you are a honest auditor. You don't do partiality. You have a professional skepticism. So that is independence in appearance. That means how you appear to others. Okay, that is also independence. So independence is of 2 types. Both the auditor must have. One is independence of mind, that in your, whenever you are expressing opinion, there must not be any influence. Next is independence of appearance. That means whenever a third party looks at you, they must, by looking at you itself, they must tell that you have integrity, objectivity and professional skepticism. It must not be compromised. Okay, so that is about that. Okay, next here these points you can just read by yourself. You will understand the same thing only they have given. See, auditor should be straightforward, honest, sincere and all of that. You can give that para read. Regarding that independence only they have told you. Okay, so now still we are in the ethical requirements topic only. Okay, first we read the 5 elements. CO, PPI we read. Next we read about the 6th element, which was independence. Now you are going to read about something known as, threat to independence of auditor. So to this independence, you might have some threats. What are such threats which may affect your independence? There are 5 kinds of threats. There are 5 kinds of threats which affect the independence of your auditing. Okay, the 5 threats which can affect your independence. So what are these 5 threats is what we are going to understand. First is self-interest threat. Self-interest. Okay, self-interest threat. So what is self-interest threat is that, see, now I am the auditor. Okay, and this is my client, and suppose this is my client. I am the auditor. What might happen sometimes is that to the person who I am going to audit, I suppose I'm going to audit their company. What might happen is that, see, I might have taken a loan from a bank. I might have taken a loan from a bank, and this person of a company might have given a guarantee to such loan. So what might happen is, when I'm going to go and audit the company, since they have helped me financially by giving me guarantee for the loan which I have taken in the bank, what will happen is I will try to be more partial towards the company and will try to help them, right? I'll try to help them. So this is a self-interest threat. I might have some kind of an interest in the firm. One, that I might have taken some loan in the bank and they might have given a guarantee for it. Or the next thing is that I might have some kind of a business relationship with the client. That means this client is my regular supplier of some kind of pen
Now I have an audit firm. In that audit firm, I regularly use pens, or I regularly use laptops. So I purchase laptops from them only. So they are providing me lower price of laptop. Now if I give a bad opinion on that firm, the prices of laptop might also rise. So that is one self-interest threat. Okay, so now what might happen is I might have a potential employment. I might have employment opportunity in the firm in the future. Now if I tell wrong about that firm itself, they'll not employ me in the future. So like this, many kind of self-interest threats might be there. What is self-interest threat? Benefit from a financial interest in an audit claim. So this will affect the independence of the auditor. This will affect the independence of the auditor. Okay. Next is self-review threat. Next is self-review threat. Self-review threat means what you do is you have made a few documents for the company. Okay, a few. So this is the company, right? Once again. So this is the company. For this company, this auditor has made a few documents. A few documents he has made. Now this same documents itself, as auditor, again he is going to audit. See, now if I made some documents, if I again audited, what will be the purpose? There will be no examination. Now suppose I write my CA inter exam and come. Now CA exam, CA ICAI body tells me that due to coronavirus, we don't have teachers. Everybody can by themselves itself review their papers and tell us whether they are pass or fail. What will you do? Will you be honest at that place? Will you be honest, or will you put pass? Pass, centum. What will you do? Definitely will pass ourselves. Nobody wants to get failed, you know. So this is a, what do you say? This is a minus, you can say. Okay, so this is a self-review threat. So if you self-review threat, what we have done, here see the audit performs services. So he performs some kind of audit services to the company. That means he might have performed a service of making a document or something like that. And the same thing if he is a matter of audit, it means same document if he is going to audit, then that will be a self-review threat. Okay, this was a RTP November 19 question, guys. Okay, you have to tell about self-review threat. Next is advocacy threat. What is advocacy threat is that, see, auditor promotes a client opinions to a point where people may believe that objectivity is getting compromised. Yes. So advocacy threat. So what happens is that there will be, this is the auditor, this is the firm, this is the auditor Anna. Okay, and this is the firm. What might happen sometimes is that the parties, see, if the company is having some kind of a clash or a dispute with the third party, the company is having some kind of a clash or dispute with a third party, what might happen is that this auditor who is there, you know, he might he might fight for the firm in such a way that it might be seen as this auditor is partial to this firm. So here what they try to tell you is auditor promotes a client's opinion to a point where people believe that objectivity is getting compromised. That means he becomes the client's advocate in a litigation of third-party disputes. That is not the work of auditor, right? Your work is to go and examine the financial statement. You just do that. When you're doing things like this is trying to tell us that there is some kind of independence which is affected here. You are not independent here. Okay. So this might be one kind of a threat. Next is familiarity threat. Okay, suppose our friend is the owner of a company. He is our best friend, our lifeline, our soulmate, whatever you can say. Okay, then in such case, what might happen is we'll become too sympathetic towards them. Even if they make mistakes, we'll not tell that. That is nothing but a familiarity threat. Next is intimidation threat. We have heard this word many times. You get sometimes when I talk to that person, you know, I feel that I'm intimidated. Okay, so what does this mean? That means that it will be such that the company is at a position higher to us, or the person by whom we are getting intimidated is in a position higher to us. In such case, only we can get intimidated. Okay, what might happen is the firm may tell us that, see, if you don't give a proper what do you say? What can I say? Suppose if you are working in a company, okay, and that audit is very important to you. That is not important for the company. Your company might also get another auditor. But because due to this coronavirus time, you only got one audit. And that audit is very important to you. So because of that, what might happen is they are in a position above to you. The company is in a position above to you. So in such case, what might happen is I will be deterred from active acting objectively. That means I will have to show some kind of a bias to the company if I want to be the auditor of the company, if I want to get the money. They may also give threats to me that I will replace you if you don't agree over their points. So like this and all, they can pressurize us to reduce our work and all of that. So this is nothing but intimidation threat. So these are the 5 kinds of threats. So now we read 5 kinds of threats which are threat to the independence. Okay, we are still in the ethical requirements points once again. Can you explain advocacy threats once again? Yeah, sure. Okay, where was advocacy? Yes. Okay, once again. Okay. So advocacy threat. So advocacy threat, what might happen is that, see here they tell you that, see, there is a person, I'll just erase this, wait. Okay. Yes. Okay. So here what they tell you is that, see, advocacy threats means that he is an auditor. Okay, this auditor, what happens is that he is perceived to promote a client's opinion. So suppose we have a client whom we are going to audit. This is our client, the person whom we are going to audit. So in such case, what might happen is that this auditor is helping. He is the auditor. He is helping or he is promoting the client so much that what happens is that the people who are watching the auditor, the people who are watching the auditor, the people who are watching the auditor may believe that his objectivity is getting compromised. That means he is having some kind of a bias with the company. See, the client, that is the company, is having some kind of a dispute with the third party. He is having some kind of a dispute with the third party. Okay, now as auditor, if you are there, okay, the person who has asked me the question, if you are there, okay, and you go to audit, you go and do the audit of a firm. Now when you go and do the audit of the firm, what is happening is the client is having some kind of a dispute with the third party. You don't have any relation with the third party. Okay, that is not of your none of your matter, none of your business to actually go and put your nose into it. Okay, but still what you do is, even though it is a third party matter, the client is having some kind of a dispute with the third party, you as an auditor try to go inside that matter and put your ideas or try to support that client. Okay, advocate that client's advocate. You're trying to advocate that client in the litigation and third party dispute. In such case, what the other people will think is that, see, there is some kind of a golmaal that is happening. Why should an auditor be so much partial to a company and show so much interest in a company or be so biased to a company? So this is nothing but advocacy threat. When you try to be an advocate of someone, that means somewhere your somewhere your independence is getting affected. Is it clear? Should I explain it once more? Next, so now we have seen, so now what we did, yeah, so now what did we see? We saw that you have threats to such independence. Now whenever you have some threats, you will put some kind of a safeguard. Right now we are going to see how are you going to safeguard your auditor from such threats is what we are going to see now. So see, if so now suppose what happens is that I was living in a house. In my house, the door used to be always open. In my house, the door used to be always open. Suddenly, what happened? I got a threat that so many little irritating mosquitoes were coming into my house. This was a threat to me. Now, what is the safeguard that I'll put into my house? Here, my independence is getting affected because somebody is keep on irritating me. I'm not able to independently open my door and keep. What is the safeguard that I'll put here? I'll not close the door. I'll put a mosquito on it. Okay. If I close the door, that means my independence is totally gone there. Okay. So that is the difference you have to understand. I'll not close my door. Rather, I'll put a mosquito net here. If I close the door, my independence will be gone. So I'll put a safeguard of mosquito net here so that the mosquitoes are not able to enter. Okay. So this is what we are going to see here. What are the safeguards that you can put to such threats? So we must only try to avoid such threats. Okay. So what are the safeguards? Yes. So here they have given you 5 safeguards. This was a question of RTP November 19. RTP November 19. Okay. So what happens is that, once again guys, Okay, so here they tell you that see the following principles are the guiding principles in this regard. So all these principles, if you follow, you will be safeguarded from such threats. If all these principles you follow, you will be safeguarded from such threats. So what are the principles that you have to follow so that you are safeguarded from such threats? Is that the auditor should maintain, he must maintain integrity, objectivity, and professional skepticism. So what is professional skepticism? I'll tell you in 2 minutes. Okay, so all these three things the auditor should always maintain so that he is safeguarded from the threats. Okay, now next what he has to do is so now even though he's maintaining all these, so what happens here is that now the auditor is maintaining objectivity, integrity, and professional skepticism, even though there are some threats which have arisen. So in such case, what the auditor has to do is he has to assess whether there are threats or not. First he has to see, okay, whether he have to see whether there are threats or not. That means now what happens is he has taken an audit in the company. Now what has happened is the auditor must always maintain integrity, objectivity, and professional skepticism. While he is maintaining objectivity, integrity, and professional skepticism, he should check whether are there any threats to my auditing. Are there any threats? If there are threats, what he must do? If there are not threats, what he must do is what we are going to see. Here I have written something wrong. Okay, if there are no threats, that means it's okay. You must accept the work and I must work in the organization. If there are no threats, I must accept the work and work in the organization. Here the catch is when you have threats. This is the catch here. So when you have threats, what you have to do is you have to take a few measures to eliminate such threats. So if you get some threats, even though you are maintaining integrity, objectivity, and professional skepticism, you must try to eliminate such threats. Okay. Now, one point must be that you are able to eliminate such threats. Another case might be that you are not able to eliminate such threats. If you are able to take measures and eliminate such threats, then you should still accept the work and do the audit. If you are not able to eliminate such threats, then it's best to reject the work and walk off. So I'll explain. Though this is nothing but the safeguards. So first thing is that the auditor must maintain integrity, objectivity, and professional skepticism while he's auditing. Even after maintaining this, if he gets some threats, he must see whether he has threats or not. If he has no threats, then okay, he can accept and go. He must accept the work and do the audit. If he has threats, then he must find measures to eliminate them. If he is able to eliminate, okay, then accept the work and do the audit. If he is not able to eliminate, then he has to reject the work. Okay, so this is the safeguards to independence. So now see, I told you that I'll tell you about professional skepticism. Professional skepticism, this is very important, guys. Okay, this is very important. Professional skepticism means nothing but QA, question answer. This is professional skepticism. What is professional skepticism? Question and answer, Q&A. That means the auditor must always have a questioning mind. The auditor must always have a questioning mind, and he must always be alert to all the situations or conditions which might indicate a possible misstatement. That means if there is an auditor, whenever he goes to the auditor, he must always have a questioning mind. That means if he finds something wrong, I find something wrong. I ask employee why this has happened. Why is this like this? If he tells something, I must not readily accept it. Again and again, I must keep on asking me that why is this? So why is this? So always I must have a questioning mind that why this can happen? Why has this happened? Why is this going to happen? Like that. Then only I'll be able to detect more frauds. Next is that I must be alert to all the conditions that might indicate a possible misstatement. That means if I'm asking, suppose one example, okay, if I'm asking an employee about something, okay, now what happens is when I ask, he just gets shocked about that thing and he stands stunned there. He starts sweating, his hand starts trembling, and he answers something. Now, because he has answered, I must not accept it. See, now here I can see that there is some kind of a condition that is indicating me a possible misstatement, right? So I must be alert to such conditions. Now I can know that some kind of thing must have happened. That's why he is sweating. Okay, so this is nothing but professional skepticism. You must always have a questioning mind, and you must always be alert to conditions which may indicate possible misstatement. It can also be due to error, or it can also be due to fraud. Okay, so we were still on the second point only. We were still studying the second point of ethical requirements only. Okay, so now in the ethical requirements, what and all we saw, we'll again see, we saw copy, then we saw what is independence, we saw what are the threats to independence, how to safeguard this independence. Next topic, what we are seeing is about professional skepticism. So now I'm going to see about professional skepticism. So I told you what is professional skepticism. Okay. So now here they have given me a few examples of professional skepticism. Okay. Here what this is was a question in our last attempt. That is in our May 19 attempt. Whoever wrote the exam and failed in an audit, this was a question. That what are the examples of professional skepticism? Nobody might have thought such a question would be asked in the exam. This was asked for 5 marks in the exam. What is the examples to direct question only? No indirect. Directly they asked a question. Examples to professional skepticism. Right. What whoever read this were able to write, understand this, they were able to write. Okay. Okay. So here they tell you that you have to see. So when and all can a professional skepticism arise? See, if there is a audit evidence, okay, and you have another audit evidence. This is audit evidence number 1. This is audit evidence number 2. Now you have found out 2 audit evidence, but this 2 audit evidence are contradictory to each other. Then they are 2 poles apart. Okay, that means that they're contradictory to each other. That means if this auditing evidence is telling me one thing, this is telling me the opposite of the same thing. So in such case, what might happen? Professional skepticism should arise. You must be alert in such cases. Okay. Suppose what happens is, I took 2 audit evidence. One, I verified the stock physically, and the other one in the stock record. In the stock ledger, I saw the stock. When I verified it physically, it was only 60 units. But in the stock ledger, it was 100 units. That means there are 2 same things only, but there are 2 different amounts there. Units there. So in such case, a professional skeptic. So now, what was I saying? So I was talking about the first example. So this is one example of professional skepticism. The second thing is that information that brings into question the reliability of documents and responses to inquiries to be used as audit evidence. So here what they try to tell you is that, say you have information, okay, but that information, when you study that information, what happens is that you get a question whether these documents which are there, are they reliable? Or if you have made some inquiries as an auditor, whether the responses are correct or not. Okay, whether they can be used as audit evidence or not. So all these, if you get a question that whatever information you have got, whether it is reliable, whether the documents are reliable, or the inquiries which you have made, or the responses which you have got, in that case, if you get a question in mind whether they can actually be used as audit evidence or not, so in such case it means that you have to be alert of the situation. Professional skepticism must be there. Okay. Next is conditions that may indicate possible fraud. In such conditions also you have to be alert. Next is circumstances that, once again, circumstances that suggest the need for audit procedures in addition to those required by standards on auditing. So what happens is there will be a few circumstances where there will be a few circumstances. So there will be a few circumstances which will require you to collect audit procedures, or you will have to do audit procedures. Okay, but what happens is that apart from the essays, auditing standards tell you to perform audit procedures, but here there are a few circumstances when you feel the need to do more audit procedures, that you find something is there that you need to do more audit procedures. Okay, normal audit procedures you have performed, you want to perform additional audit procedures in a few circumstances, then in such circumstances also you need to be alert if you feel the need that you want to do more audit procedures. Okay. Next is maintaining professional skepticism throughout the audit is necessary if the auditor is to reduce the risk of. So this is the basic point. They have just told you that if you want to reduce the risk, then in such case you have to maintain professional skepticism. So this is an example. Example here tells you that if you want to reduce the risk, you maintain professional skepticism. Okay. Next is if you have some kind of unusual circumstance that is happening, in such case also professional skepticism. That means you have to be alert. Next is over generalizing when drawing conclusion from our audit observations. That means what happens here is that everything is very much generalized. Okay, so for this, what I'll do is I'll make an example and I'll send it in the Bhavna's Online Academy channel later. Okay, this point, the example I don't have it right now. If I explain it with example only, you'll be able to understand. So for this example, I'll send you later. Last is using inappropriate assumptions in determining the nature, timing, and extent of audit procedures and evaluating the results thereof. Okay. So what happens is the assumptions that you have taken when you are determining the nature, timing, and extent for the audit procedures or evaluating the results, they are inappropriate. In such case, also you have to be very alert. Okay, that means there will be a few assumptions that you would have made. You know that due to this much scope I will have for audit, this much timing. Say now I found out some kind of assumption. Okay, about this company, I must have some kind of assumption. Using that assumption only, I'll decide my nature, timing, extent of the audit procedures. Correct? How much? Now I think if the company is good, then in such if I assume that the company is good, then my nature, timing, and extent of audit procedures will be less. Or else, if I think that is a fraud company, then it will be more. Okay, but what had happened is whatever assumption I had made, it was actually inappropriate. That I realized later only. In such case, I have to be alert. Okay, in such case, I have to be alert. So I'll just give you a fast glance. One is that when one audit evidence is contradicting with the other. Next, if there is some information which is making you to actually question the reliability, then in such case also you have to be alert. Third is if there is possible fraud. Fourth is if you feel the need for performing additional audit procedures, you have to be alert. Next is you have to maintain professional skepticism to reduce risk. Next is when you have some unusual circumstances, and also whatever assumptions you had taken. So all these things are the examples for professional skepticism. So see, these things and all you will only have to mug up. You will only have to mug up these things. Okay, so this is from November 19 exam, direct question. Okay. Next is acceptance and continuation of client relationship with audit. Next is, so now this is a new point. Ethical requirements, totally we have completed. This is the third point out of those 6 points. Acceptance and continuance of client relationships and audit engagement. So what might happen is there. So now this year, one auditor had done the audit of financial statements. What happens is then the company tells you that next year also the same auditor can come. Next year also you itself come to our company for auditing. If the company tells us so, then in such case, how will you accept it or how will you continue it is what we are going to see. So what they tell you here is, so once again, so here, so before you accept an audit, okay, so now whenever you accept an audit, that means let it be for the first time or the nth time. Whenever you accept audit or whenever you're going to continue the audit of a company, few things you have to see. Few things you have to see or check or see before you accept it. What are those few things you have to see? These 4 points. Okay, so SQC1 tells you 4 points that you have to see if you want to accept or continue with the audit engagement. What are those 4 points is what we are going to see here. First is that you have to see about integrity. So first what they tell you is that you have to see whether the client with whom you are working, is he honest in this relationship? Is he a honest person or a fraud person? You have to see. Okay, what is the integrity of the client? You have to see. Okay, next you have to see whether what engagement team, whether the engagement team that you are having, engagement team is the audit team that I will be working. Okay, that will be working under me. The engagement team what I am having is competent to perform the audit or not. Okay, and also whether they have the necessary capabilities, that is time and resources, whether they have to perform the audit or not, you have to see. So whenever you accept audit, first you have to see the integrity of the client, that whether the client is honest or not. Next thing that you have to see is the engagement team is competent to perform the audit or not. Okay, then you have to see whether the engagement team can comply with the relevant ethical requirements or not. Whether they can comply with the relevant ethical requirements. What are the 5? I told you a short form for ethical requirements, right? What is the short form? What is the relevant ethical requirements here? Which ethical copy? COPPI. Okay. Yes, very good. So that only they are telling you engagement team must comply with the relevant ethical requirements. Next, they have to see whether the significant matters arisen from current or previous audit engagement and their implications for continuing the relationships. Okay. So you may think that this is very hard to remember. Right. So here I have given you examples so you are able to remember better. So this example is the example of a this is the example of a relationship. See, so now what happens is, so we'll take the example of a person. Okay, she is a she. Okay, she wants to get into a relationship with he. She wants to get into a relationship with he. So first she has to check whether he is honest or not. Okay, if he is not honest, he has many other girlfriends and he is not honest with her. Okay, that he already has so many relationships, then that will create a problem. You must first check whether he is honest or not. Once you have checked that, you must see whether right now you are ready to get into a relationship or not, whether you have the time to get into the relationship, whether you have all the needed capabilities that you want to get into a relationship. Suppose now you are studying CA. Do you have time for all these relationship stuff and all? No, you won't have. So you must see whether the engagement team, that is me, whether I am competent to perform the love or the audit. Okay, so that I have to check. That is the second point. Third point is that whether the engagement team can comply with relevant ethical requirements. That means whether this girl can comply with whatever the family requirements are there. That means this girl's parents might have a few, not his family, okay, this girl's family's parents might have a few requirements for a groom. Whether this girl is able to find a groom of such requirements, she has to see, okay, whether she can comply. Okay, next is that, or she is able to comply. His parents might also think that there are a few things that she has to comply with. Whether she's able to comply, that you have to see. Fourth point is that significant matters arise in current or previous audit engagement. That means, see, now you have to see whether you were also in a past relationship. Okay, you were in 2 to 3 past relationships and then that didn't work. Okay, you have to see whether the current or previous audit, that means current audit, that means now the love that you are going to do, or the previous audit means the previous love which you have done, whether that will have any implication on continuing the relationship, whether this will affect your relationship. Now you have to see. Okay, so all these 4 things once you have seen, that means now you can see if you want to accept it or not. Now if you want to accept the boy or not. Okay, so these are all the 4 points that you have to remember. I hope this is clear. Is it clear, guys? This was our third point, acceptance and continuance of client relationship and audit engagement. Okay, awesome. So we have studied 3 points until now. One is leadership, then is ethical requirements, then next is acceptance and continuance of client relationships and audit engagement. Okay. Fourth point is human resources. So what is human resources? So now what we are reading, what is the topic actually we were reading? We told that this is the 4th element. What is the 4th element? What topic were we actually reading? Main topic under which this is the 4th point. Fast, without seeing the book, if somebody can tell me. Quality control, not ethical requirements. Ethical requirements was the second point under quality control. Now we are studying the 4th point, human resources. Okay, quality control, very good. So to maintain quality, what and all we have to do only, we are seeing now. So the 4th point is human resources. 1 second, guys. So the 4th point is human resources. So whenever you're going to perform audit to maintain quality, the important people, it is important that you have a check on your human resources also, that how is your engagement team, the expert, whether they all have the capabilities, competence and commitment, you have to check so that the quality in an audit is maintained. So who and all will be involved in audit? The engagement team, the engagement leader, the experts, all of them who are involved in doing the audit should be triple C, should be capable, competent and committed. Commitment. Okay, so all these 3 things they should have. Okay, so if you want to find people with these 3 C's, if you want to find people with this 3Cs, to find such people, we need to make policies and procedures. So you need to make policies and procedures that address. So whenever you are recruiting, you have to see whether these three things are, whether these three qualities are there in the person. You have to, once you have recruited, you have to see in the performance evaluation whether these three C's are still there. How is their performance? How much competent they are? How much is their capability? What is their commitment level? All these three things you have to see. According to that, your career development may happen, promotion may happen, compensation may happen. Okay, estimation of personal needs. So all these policies and procedures you have to address. You have to make policy and procedures which addresses all these things so that triple C's are maintained. Okay, okay, guys. So this was our fourth point. So 4 points we have completed. First is leadership. Second one is ethical requirement. Third one, what was the third one, guys? Third one was continuance, acceptance and continuance of audit engagement, I guess. Fourth is human resources. Now fifth point we have come. Only 2 more points left. Fifth is engagement performance. Engagement performance means nothing but your audit performance. Whatever audit assignment you have got, that performance is known as engagement performance. Okay. Yes. So engagement performance. So what they tell you here is that the firm should establish policies and procedures designed to provide it with reasonable assurance that engagements are performed in accordance with professional standards and regulatory requirements. So they nothing. Just see this. So what they first tell you is that whenever you perform a audit engagement or an engagement performance, whenever you do, you must always perform it in accordance with the professional standards and also the law. That is, whatever regulatory requirements are there and professional standards are there, all that you will have to comply in accordance to that only you have to perform your audit engagement. Okay. Next is that you have to also issue report related to it. You have to also issue reports that are appropriate in the circumstances. The engagement partner. Who is the engagement partner, guys? Who is the engagement partner? Who is the engagement partner? Here they have told you that engagement partner should issue reports that are appropriate in the circumstances, right? Who is the engagement partner? You tell me, I'll check in a while. Okay. So engagement performance. So whenever you perform auditor is engagement. No, I told you something else. Who is the engagement partner? The leader. Very good. Why is only Nandita answering? What happened to others? Didn't I tell you the leader, the role model is no one but the engagement partner, right? Under him only the engagement team works. Okay. Yes. So engagement performance. So engagement performance, whenever you perform an engagement, that means whenever you perform audit, you must always comply with perform the audit in accordance with the professional standards and regulatory requirements. And also it is the responsibility of the engagement partner to issue report. Okay, according to the circumstances. Okay. So here they have told you that you have to issue a report, right? Or you have to work in accordance with the regulatory requirements. So here what they tell you is that they have to establish policies and procedures also. So you have to establish policies and procedures also. One second guys. Here, yeah. Okay, I'll draw it and show to you here so that you're able to understand. So this is a firm. So this is the audit firm. This is the audit firm. Okay. So what this tells you here is that, so whenever you're going to go and do an audit, what you have to do is, before going and doing an audit, you have to establish few policies and procedures. You have to establish few policies and procedures. What will this possible policies and procedures do is that they will give you reasonable assurance. They will give you reasonable assurance that on two things they will give you reasonable assurance. One is that all the professional standards and law or the regulatory requirements are followed. That means all your audit work is done in accordance with the professional standards and regulatory requirements, and also that your engagement partner is issuing reports. So this is what they have to take care. Okay. So this is what they have to do. Now what happens is, through these policies and procedures, what you do is, the firm, why does this audit firm makes these policies and procedures, is because they want to establish consistency. It's because they want to establish what? Consistency. Okay, is because they want to establish consistency. So how are they going to establish this consistency is that they are going to make policies and procedures. They are going to make these policies and procedures and put it into a manual. So in this manual, what are the contents that it should have? What are the contents that it should have is what they have given here. Okay, so now I'll again, this might be like slightly confusing. I'll just give you a recap of it. So what they tell you is that there is an auditing firm. They will have a few policies and procedures. Why do they have these policies and procedures? Because they want to give reasonable assurance. What is the reasonable assurance they want to give is that the auditor who is going to audit is following all the professional standards and also complying with the law, and also that the engagement partner is issuing report. Why is the policies and procedures made? It is made to bring a consistency, because okay, it is made to bring consistency. Okay, so this policies and procedures, it will be written in a manual. So in this manual, a few contents will be there. What are the contents is what we are going to see. First is that how engagement teams are briefed on the engagement to obtain and the understanding of the objectives of their work. So there must be a policy and procedure written where it states that how the engagement team who is going to go and do the audit are going to understand their work. So how, whenever you go to entity, how are you going to understand the work of entity, or how are you going to understand how you have to work in entity? So regarding that, all the policies and procedures should be given. Next is that how are you going to comply with the engagement standards? That regarding to that also you have to bring in policies and procedures. Third is that the supervision staff, the engagements supervision, staff training and coaching, how is it going to be done? Regarding that also you have to tell in the policies and procedures. Whatever work is performed by the engagement team, how is it going to be reviewed? That regarding to that also policies have to be made, and whether how you will maintain appropriate documentation, you have to bring policies on that also, and process to keep all policies and procedures current. Okay, so if there is some kind of a change in the law or anything, how will you keep your policies updated? Regarding to that also you have to bring a policy. So these are the 1 2 3 4 5 6 matters on which you have to make policies and procedures about, and this will be the content of your manual. Okay, I hope this is clear. So now the fifth point also we have cleared. Fifth point is engagement performance. Now last point, guys, sixth point. So what are the 5 points? Did we read a quick revision of that? First point was regarding to your leadership responsibility. Second point was ethical requirements. Third point was acceptance and continuance on audit. Fourth point, fourth point was human resources, I believe. Fifth point is engagement performance. Sixth point is monitoring. So 6 points says nothing but that all the 5 points which we already read should be monitored properly. So how will you maintain a quality control? That all the 5 points which I just told you about are all these working properly to maintain quality, you have to monitor. This is nothing but your sixth point. Okay, so what is the purpose of monitoring? Why do you monitor all those 5 points? Why do you monitor all those 5 points? The purpose of such monitoring is given here in 3 points. The first purpose is that adherence to professional standards and regulatory legal requirements. So it is a legal requirement or a professional standard that you have to monitor, so you monitor. Next is that whether the quality control system has been appropriately designed and effectively implemented. So whenever you monitor, you will be able to understand whether the quality control system is effectively designed and whether.
So now we are going to start with preconditions for an audit, SA 210. Okay, now first we'll understand what this SA 210 is trying to tell us. Okay, so what happens? This is our auditor Anna. He is our auditor Anna. Okay, so this is he is our auditor Anna. So what happens is, so our auditor Anna, what he does is he gets a request from a company. He gets a request from Reliance. He gets a request from the Reliance. Reliance requests this auditor Anna to do audit in their company. So what this auditor has to see is that he has to see whether he can accept the Reliance audit or not. How will he see is that there are a few preconditions.
That means there are a few conditions. Only if these conditions are fulfilled, it is better that you accept the audit. Only if these preconditions are fulfilled, you must accept the audit. Okay. So what is there in SA 200 is the preconditions for an audit. So whenever before you accept audit, you have to check whether these preconditions are fulfilled. Only if these conditions or preconditions are fulfilled, you must accept the audit. That is covered in SA 210. And next, what is covered in SA 210 is what is the responsibility of management, TCWG and auditor. So this is the scope of SA 210. What are the two things? Repeat after me: the preconditions for an audit and also the responsibility of management, the responsibility of TCWG, the responsibility of auditor. Everything is given in 210. Okay. So what is the objective of 210 is that here what we are going to understand is whatever preconditions are there that we are going to understand, and also common understanding. That means regarding the audit engagement letter also we are going to see here. Okay. Yes. So let's start with SA 210. So SA 210 name is agreeing the terms of audit engagement. Also, whenever you read a auditing standard, right, it is very, very important that if there is an exam, so if in exam a question is asked, in the question they have already told you that this question is related to SA 200. Still, whenever you are going to write answer, you have to write that SA 200. The whole name you will have to write and come. Okay. So it is very important that I can also say mug up the name or memorize the name. It is very important that you remember all the names of standards on auditing. Okay, yes. So that was one point. So SA 200 is agreeing the terms of audit engagements. Okay. So we'll first try to understand the name. So agreeing, you have to agree to something. Okay. That means agreeing means you have to agree to something. To what you have to agree? You have to agree to terms. What are the terms you have seen? No. Whenever you buy a ticket or whenever you make some order or something, there will be T&C applied. That means terms and conditions applied. Okay, so to such terms and conditions, they will always tell you when suppose you're buying a movie ticket, suppose you're buying it online, regarding cancellation policy, they will have some terms and conditions. They'll tell you that you have to agree to these terms and conditions to book the ticket. So whenever you don't read it, that's fine. But you click on I agree, right? So that is what is agreeing the terms. So here we don't have to agree to the terms of a ticket or a cancellation policy. Here we have to agree to the terms of audit engagement. You have to agree to the terms of audit engagement. Audit engagement means whenever you are going to do an audit, there will be a few terms. For that you have to agree, or you have to see whether they have agreed. Okay, so this is what is agreeing the terms of audit engagement. I hope the name of SA 210 is clear to you all. Okay. So now first we are going to see the preconditions for an audit. That means before you accept an audit, you have to see whether all these conditions are fulfilled or not. Only if these conditions are fulfilled, you are suggested to take up the audit. You have to do the background check. So whenever what happens, in Indian culture, there is a tradition that whenever a girl is going to marry a boy, or when a boy is going to marry a girl, the parents or the relatives, they do a background check of the boy or girl, and then only they accept the marriage proposal. Right? You would have seen, right? Same way, whenever you accept audit, the background check you have to do. That is whether these things are available already, whether the preconditions exist, you have to check. Okay. Yes. So first is determine whether financial reporting framework is acceptable. So what happens is, if this is the company, okay, if this is the company, when this company would have prepared their financial statement, they would have prepared it using some financial reporting framework. Okay, so how many of you are here who doesn't know the meaning of financial reporting framework? Because if you don't know, I'm going to explain it, or else I'll skip. You want me to explain what is financial reporting framework? These are basic. This financial reporting framework word is going to be used 100 times in the chapter. I mean, in the auditing subject. You want me to explain, or do you know? Yeah, explain. Okay, fine. So what is financial reporting framework? That means, see, So there are different kind of companies who have different acts which are applicable on them. Okay, so what happens is, suppose if this is a banking company, they have Banking Regulation Act applied on them. They have Banking Regulation Act applied on them. If there is an insurance company, there is IRDA which is going to be applied on them. If there is any other company, Companies Act is going to be applied on them. Okay, so likewise, if there is a stock exchange company, SEBI Act is going to be applied on them. So here what happens, different kinds of act are applied on different kind of entities. Okay, so what happens, each act, each act tells you a format. Each act tells you a format by which you have to prepare your financial statements. So you would have done your advance accounts, November 19 attempt, whoever would have done, or in November 20 attempt also. See, whenever you make your banking financial statements, there is a chapter in advance accounts which talks about banking financial statements. So there you have a different kind of financial statement format. Have you seen that? Different kind of financial statement format for banking companies. It's not like the regular schedule 3 which we prepare. It's not like the vertical schedule 3. You have different kinds of things there. Have you seen? Do you know what I'm talking about? Yes. So likewise, see, for insurance company also there is a different format of financial statement that is prepared. So each company or whichever comes under that act has a different format for making those financial statements. So that is nothing but their financial reporting framework. So that means your financial statements, how you are going to report, there is a framework for it. What is financial reporting framework? Your financial statements, how you are going to report, for that there is a framework. So the auditor, what he has to do is, when he is going to audit a company, if he is going to audit a bank, he has to check whether the financial statements of the bank are made according to its financial reporting framework. If he is going to go to a company, he has to see whether schedule 3 is followed. See, company makes balance sheet using schedule 3. Okay, so suppose if they use schedule 6 and make, then here the financial reporting framework is not acceptable. So to that company, what financial reporting framework is acceptable, that financial reporting framework, whether they have used it, they have to see. The auditor, the company has made the financial statements according to that, the auditor has to see. Because the auditor is not going to make the financial statements, he's just going to examine it. Who is going to make the financial statements? The management of the company. So whether they have followed, or whatever financial reporting framework they have followed is acceptable or not, the auditor has to check. This is the first precondition for an audit. Okay. Second precondition. Okay. Second precondition is agreement of management. Obtain the agreement of management. So management has to agree on something. What it has to agree on is that it acknowledges and understands its responsibilities. So there are a few management responsibilities. Okay, so the management has to agree that they have fulfilled the following responsibility. So now what we are going to see is, what is the management's responsibility is what we are going to see now. First responsibility is that the management's responsibility is that they have to prepare the financial statements. Yes, because auditor is not going to prepare the financial statement. Who is going to prepare the financial statement? Management. So whether managers knows, that means acknowledges they know, and they also understand their responsibility that they have to prepare the financial statement in accordance with the applicable financial reporting framework. Okay. Next, you have to see whether the management understand that they have to, it is their responsibility that internal controls are placed. Okay. So for the internal control, as management considers this. So about internal controls, you will read in the later chapter. Okay, this is also very important and interesting topic. For now, you can just understand that it is a control that is placed inside a company for its better operating efficiency and effectiveness. Okay, so such internal controls, whether they are placed by the management, where you have to see, because these internal controls will be placed by the company, in the company, by the company, and in the company. Auditor has no role in that. Okay, he'll only check if the internal controls are working properly or not. So you have to see whether the management has to place internal controls. Okay, next is, so to provide auditor with all information additional information, and also unrestricted access to persons. So here what they try to tell you is, so it is also the responsibility of management that they provide auditor with all the information that the auditor asks. Also, if there is any additional information the auditor may request, that also the management has to provide the auditor. And also, sorry guys, yeah, and also if there is something, if there is a need that the auditor wants to access a few persons and talk to them because he wants to obtain audit evidence, then in such case unrestricted access without any restriction, auditor must be given access to those persons within the entity if he wants to obtain the audit evidence. So this is the preconditions for audit. So what are there are two preconditions for audit. One, that the company, whether he has to check whether the company's financial reporting framework is acceptable. Second point is that he has to see the management responsibility. He has to see whether the management is understanding its responsibility or not. So what are the management responsibility? There are three management responsibility. One, he has to see whether management understand that it has to prepare financial statements according to applicable financial reporting framework. Management understands its responsibility relating to internal controls. Management also understands that it has a responsibility to provide the auditor all the information, additional information, and also an unrestricted access to persons if it is necessary to obtain audit evidence. So this is the precondition of audit. That means before you do the audit, you have to see whether these conditions are fulfilled or not. Okay. Next is agreeing on the terms of engagement, agreeing on audit engagement terms. So agreeing on audit engagement terms is nothing but, see, so what happens is once the auditor has checked that whether all the preconditions are accepted, what happens is that the auditor will send an engagement letter to the client. The auditor, who will send an engagement letter to the client? Auditor will send an engagement letter to the client. Client will send an appointment letter to the auditor that he has been appointed. But who will send an engagement letter? Auditor will send an engagement letter to the client. Always remember, here many people make mistake. They write that engagement letter is sent by the client to the auditor. Wrong. Auditor is the one who drafts the engagement letter and send it to the client. I hope this is clear. Okay. So now we are going to see audit engagement terms. Audit engagement terms is nothing but the audit engagement letter. This is nothing but the engagement letter. Okay. So agreement, on that agreement they have to see. Okay. Now see here. So agreed terms of audit engagement shall be recorded in an audit engagement letter or suitable form of written agreement. So here what they try to tell you is, see, here they tell you that agreed terms. So for doing an audit, see, this is auditor. Okay, this is auditor and this is the company in which he is going to audit. Okay, so what they see, so there will be a few terms. Okay, there will be a few terms which have been agreed by the company and also by the auditor. That auditor would have said that this much that what, okay, see, now below we are going to read what and all is included in the engagement letter, but I'll still say you that in that engagement letter, you know, there will be a few things like what is the objective of the auditor, what is the scope of auditor, what are the responsibilities of auditor, what are the management responsibilities, like this many things will be agreed by them, that this much, to this extent only auditor is going to be. So suppose there is this auditor, he will tell the company that only up to 70% extent I will check your records. The company would have said okay to it. Then the auditor would have said the company that, see, you have to prepare your financial statement according to this only. Also, you would have said that, see, if I ask you some information, you have to give it to me. Then the company would have said okay for it. So there would have been few agreements between them. Okay. So what you do is all these agreements which are related to the audit engagement, you put it in the form of you record it. You record it. All these terms which are spoken by the auditor and the company, you try to record it. You try to record it and put it in a letter known as the engagement letter. Or it is not important that you put an engagement letter alone, or any other suitable form of written agreement also you can put these terms in. So this just tell you again. So there is auditor and there is this client. They both agree on a few terms. So this few terms you have to record it, right? Only if you agree it is, you need to have evidence. Only if you agree it is not enough. So you try to record it. You can either record it in the audit engagement letter, or you can record it in the form of a return agreement. Some kind of a return agreement you can have. If you have whatever it is, this will be drafted by the auditor. This will be done by the auditor, and this will be sent to the client, and the client will sign it and say okay to it. Okay. Yes. So what will be the inclusions in the audit engagement letter? What are the things that you will include when you write an audit engagement letter? First is the objective of the auditor and the scope of the auditor. See, objective and scope we read in the starting, that there are two objectives of an auditor, and there are a few scope of audit also we read, right? So these both, whatever is the objective and scope of the auditor, you will write that in the engagement letter, so that you don't have any confusion between the client. See, the client may not know what your objective as auditor is, or what your scope as auditor is. Now if you tell them that this is my scope and this is my objective, let's agree on it, then that will be agreed. So this will be written in the engagement letter. Next, what is the responsibility of auditor? Also you'll write in that engagement letter. So what is the responsibility of an auditor? He has to issue an opinion. He has to issue an audit report. That is his responsibility, and many other responsibilities of auditor might be there. All those responsibilities you have to write in that engagement letter. Next, responsibilities of management you have to write. Just now we read what are the responsibility. 3 responsibilities of management we read. No, there may be other responsibilities of management also. So all those you have to write in that engagement letter. Then you have to identify the applicable financial reporting framework for the preparation of financial statements. So for that company, what is the applicable financial reporting framework you have to see, and you have to identify that and write it in the engagement letter. So in the later stage, you don't have confusion which framework they had to follow. So you clearly state down that this is your applicable financial reporting framework, and you write it in that engagement letter. Next, you write expected form and content of any report to be issued. So see, when you write an audit report, so there are a few things that a few companies add extra, a few companies don't add. So what is the form of report, or what is the content of report that is going to be issued in the later stage once audit is completed, that also you will record it in the engagement letter. Because when at the end you issue a audit report, there must not be any clash. Okay, so whatever is the expected form and content of the report, you guys write it on the engagement letter. So these are the 5 things that you write in the engagement letter. See, okay, that only I've given you as sorry. Okay, so S is the scope of audit. O is the objective of audit. R and R, there are 2 R's. One R is for responsibility of management, other R is for auditor's responsibility. I is identification of applicable FRF, and E is expected form and content of audit report. Sorry, you have to remember it as sorry. Okay. Done. Next, so that was all about your next topic, agreement and audit engagement terms. Okay, the other text and all, once if you read, you will understand it more clearly, this topic. Okay, try to read it once whenever you get time. Before exam, at least once, take your ICAI textbook and try to read it wholly, like how you read a novel or something. Okay, just, you don't need to remember things, just read it. Okay. Next is recurring audit. Recurring audit means nothing but year after year you are appointed as the auditor. Okay, so a few people here might have a doubt. Whoever has studied company audit, these people might have a doubt. See how year after year auditor will be appointed. Does anybody have a doubt? Whoever has read the 5-year or 10-year tenure in company audit, do you guys have a doubt? How an auditor can be changed year after year? Anybody who has a doubt? If no, I'll just continue. Yes? You have a doubt? Yes, correct. How can an auditor be appointed year after year? In company audit, we read that, see, auditor has either a tenure of 5 years or 10 years. Yeah. Exactly. Rotation period. Correct, Bhagi. Yes. So what will happen? How can an auditor be appointed year after year? Even when I read this for the first time, even I had this doubt. Then I understood that I didn't read the concept of rotation of auditors in company audit clearly. Those who haven't read company audit, once you read company audit, come to this lecture and listen to it again. So you understand better. Okay. I've already uploaded it on my YouTube channel. Okay. Yes. So what happens is there when I was studying company audit, I told you that there is only 4 types of companies to which this rotation is applicable. Didn't I tell you applicability of rotation of auditors? Did I tell you or not when I was teaching you company audit? All listed companies which have paid up share capital of 10 crores or more. So you understand now. So only for those companies rotation is needed. For other companies you don't need rotation. Year after year also you can change. Year after year also you can change the auditor. So that difference you must have in the mind, that only for those 4 types of companies rotation period or 5-year tenure or 10-year tenure is there. For other companies there is no 5 or 10-year tenure. In such case what will happen? Year after year the auditor can be changed or not? You guys tell me, year after year the auditor can be changed or not? Can it be changed? Yes or no? Yes, very good. The year after year, the auditor in such case can be changed. Okay, I hope that clarity is there with you now. Okay. Yes. So what happens when you are the same auditor year after year? That means year after year, suppose you are appointed in the same company as an auditor, what will be the case then? What will be the situation then is what we are going to study in this recurring audit. Okay. So auditor, so on recurring audit, so in this topic what we are going to talk is, so we told that when suppose Reliance Industries came to me and told me that they want me to do audit. Okay, I am the auditor Anna, I mean someone, okay. The auditor Anna is there, the Reliance Industries came to the auditor Anna and told them we want you to do the audit. Okay, so first year this auditor Anna did the audit. First year this auditor Anna did the audit. Okay, so what happened was that this Reliance Industries loved our auditor Anna and told him next year also please you itself do our audit, please they told. Okay, so now we have to see what this auditor Anna has to keep in mind before accepting the recurring audit. First thing is that whenever he was first appointed as the auditor in the Reliance Industries, he would have drafted an engagement letter. Correct or not? Before taking of the audit, he would have made an engagement letter and given it to the Reliance Industries, and they would have accepted the engagement letter. In that engagement letter, they would have written all the content regarding sorry. Okay. So now in second time you are going to be appointed as an auditor, the question here is that whether for the next second year also a new engagement letter has to be drafted every time you get appointed. So the question here is that for every new appointment, whether a new engagement letter has to be drafted. That means if you are getting appointed in the same company, like year after year, is it important that you draft a new engagement letter? The answer here is no. But to this, no, there are also a few exceptions. The answer here is no. See, every year it is not important that you draft a new engagement letter. But when a few circumstances are there, when these few exceptions occur, it is important that you draft a new engagement letter. Okay, whatever content I told you regarding this recurring audit, is it clear? Should I explain it once more? So here they tell you, see here we are going to read. They tell you that on recurring audits, auditor have to check whether circumstances require the terms of audit engagement to be revised. What does terms of audit engagement here refers to as? It is nothing but your engagement letter. Terms of audit engagement is nothing but your engagement letter. So auditor has to, so what was I saying? Yes. So auditor must check whether these few circumstances require the terms of audit engagement to be revised. Okay. So if the circumstances does not require the engagement letter to be revised, don't revise it. If the circumstances require the audit engagement letter to be revised, then revise it. Okay. And whether there is a need to remind the entity of the existing terms of audit engagement. So now suppose if you don't make a new engagement letter, you have to tell the company that, see, we are going to follow the old engagement letter. I hope we don't have any confusion about that. I hope you already know what the old engagement letter is about. So shall we follow? Okay, like that you have to remind the company. Okay, remind the entity. Remind the entity. Every time I say a company, it just becomes very narrow. Entity is a very broad area. Company is a narrow area. Okay, so just change it to entity. Okay, I've just got a habit of saying it as company. I'm sorry for that. Okay, so here they tell you that auditor may decide not to send. Auditor may decide not to send a new engagement letter or other return agreement each period. So it is auditor's decision that he may not send a new engagement letter or return agreement. However, the following factors make it appropriate to revise the terms of audit engagement. So if any of these conditions are there, you may need to draft a new engagement letter. So what are these conditions is what we are going to see now. Suppose what happens is that there is any indication that, the entity has misunderstood the objective and scope of the audit. That means last time you had drafted an engagement letter, but what happened was that last time, in that engagement letter, the entity, we had some misunderstanding about the objective and scope. It was not clear. In such case, what you do, it is better that you draft a new engagement letter itself. Second, if there is any revised or special terms of audit engagement, that means in last year, there would have been a few terms and conditions you would have agreed upon. But what happened is this time, in the second year of your audit, what happens is that there is a few special terms or terms which are already there had been revised slightly. Then in such case, it's better that you prepare a new engagement letter. Okay. Next is if there is a change in senior management, prepare a new engagement letter. If there is a change in ownership, prepare a new engagement letter. If there is a change in nature or size means before what happened, before the nature or size of the entity's business. Okay, so before it was only having the business of suppose trading. Now it has entered into the business of manufacturing also, suppose. Like this, if there is any kind of a change in the nature or size of the entity's business, then in such case also it's better you draft a new engagement letter. If there is any change in the legal or regulatory requirements, you can draft a new engagement letter. And if there is a change in financial reporting framework, in such case also, which has been adopted, if there is any change, in such case also you can draft a new engagement letter. And if there is any other reporting requirements, if there is any change, then in such case you can do. So please remember this also. Okay, recurring audit means year after year when you are appointed as auditor, you have to see whether you want to draft a new engagement letter or not. If you choose not, then you have to see whether the company knows that you're continuing with the old engagement letter and all the terms and condition in that is familiar and understood by the company. If you are going to prepare a new engagement letter, when and all you can prepare, such circumstances they have given you here. Okay, I hope this is clear to you guys. Next, what topic we are going to study is the limitation on scope prior to the audit engagement acceptance. Okay. So here what this topic is trying to tell you is that, see, our auditor Anna has come. Okay. He is going to accept the Reliance Industries audit. Okay. But prior to the acceptance, before he has even accepted the audit, from Reliance Industry, there is some limitation on the scope. There has occurred some limitation on the scope. Okay. So now we are going to understand that in detail. So the topic, I hope it is clear. See, Auditor Anna has got an offer from Reliance that can you please do audit. But before even he accepts such audit engagement, what happens is a few limitations are posed on him by the company. On his scope, basically. Okay. So regarding that only we are going to see. Okay. See, what will happen is, this limitation which is posed by the Reliance company. This limitation which is posed by the Reliance Industries, what the auditor believes is that the limitation will result in either auditor disclaiming an opinion on the financial statement. Sorry, either was not there. Will result in auditor disclaiming an opinion on financial statement. Then the auditor shall not accept. Okay, I'll try to make you understand.
So here, what they try to tell you is, see, auditor. What happens is, auditor believes that if such limitation is posed on him by the company, then what will happen is that this auditor will have to give a disclaimer of opinion. He will have to give a disclaimer, not unmodified or modified. He's not saying whether true and fair view or other views. If he believes that he has to give disclaimer of opinion in such case due to the limitations that have been posed by the company on him, then he shall not accept. Why only in the case of disclaimer of opinion he should not accept? Why only what if the limitation is not, what if the company poses some limitation and it is making him to give, and it is, what are the other, okay, what are the other types of opinion? First, I'll ask you that if you know. What are the types of opinion? Modified, unmodified, right? What are the, under that there are a few subtypes, right? Disclaimer of opinion, like that a few subtypes are there. What are those subtypes? Please tell me, anyone who can say. Qualified, adverse, disclaimer. Awesome, awesome, okay. Yes, so there are 4 types of opinion. One is true and fair, then it is qualified, adverse, and disclaimer. So what this says, see, the company might pose a limitation on the auditor. This limitation, it can cause 4 types of opinion. One is true and fair view opinion, or a qualified opinion, or a adverse opinion, or a disclaimer of opinion. See, if the auditor believes, spelling correct only, yeah. If the auditor believes that it is going to give him true and fair view, it's okay. If the auditor believes that due to such limitation I would have to give a qualified opinion, it's okay. If the auditor believes that due to such limitation I will have to give an adverse opinion, it's still okay. But the problem is only when the auditor believes that due to this limitation he will have to give a disclaimer of opinion. Why? What does this disclaimer of opinion actually mean is that the auditor cannot express opinion. Here, at least qualified, he can say that these areas are qualified. In adverse opinion, he can say this areas are opinion. What is a qualified opinion? About this, we are going to read in detail in other chapters. But just disclaimer of opinion means, listen. Disclaimer of opinion means I cannot even express opinion. Okay, that is what is disclaimer of opinion. See, what your main purpose is? To give an opinion. At least it must be true and fair or not true and fair. If both you are not able to say, then what is the purpose of doing such audit? See, now this auditor Anna knows that prior to the acceptance of audit itself, he knows that he is going to give a disclaimer of opinions, and why should he even accept? Okay, he knows still, he believes. Okay, yes. So in such case, he shall not accept is what this tells you. This is about limitation on scope prior to audit engagement acceptance. I hope this is clear to you guys.